Good morning, everybody. Welcome back to another episode of the Market Open. We are here and live today on a very important day. Why is today important? Well, we have PPI data. PPI data came in just 15 minutes ago. CPI data will be tomorrow. I'll be live for CPI 8:20 a.m. So 8:30, we're going to get those numbers tomorrow, and we'll see how that plays out. But PPI is a beat across the board. We came in cold across every single level on PPI, which is why you are seeing the markets rally right now and actually do pretty good in the pre-market. So we're going to talk about PPI. We're going to talk about the levels we got and why those PPI numbers were important. Number two, Palantir. Another deal. Last week we got Wendy's. The day after that we got Microsoft. A couple days after that, we got the Air Force contract. Then a couple days after that, we got the South Korean defense contract. I talked about all four of those deals yesterday in the Daily Palantir episode. Today, we get another contract, and this contract is with a smaller company. You guys might have heard of them before, Surf Air Mobility, but they are using Palantir to build the foundational AI infrastructure part of their business, the operating system called Surf OS. So we're going to dive into what that operating system is, why it's so important, and why they end up securing that deal. And then we have a bunch of earnings data. We have some random stuff that happened this morning with Starbucks and Chipotle. You might be looking at Starbucks right now and saying, why the hell is it up 15%? Well, they poached Chipotle's CEO. And Chipotle is down 10% because they lost their CEO. Now, the Chipotle CEO, baller guy, increased revenues by like 8x over the past 5 years. How did he end up in Starbucks? Not sure. Starbucks probably did need to fire their old CEO. That guy just wasn't the best. I don't know how much they paid the Chipotle guy to come in, but that news happened this morning, so we'll talk about that. And then finally, Home Depot, biggest earnings of the morning. Home Depot's down 3%. I don't think it really deserves to be down 3%, but Home Depot did say the consumer is struggling. So we're going to kind of dive deep into how much of the blame did they have on the earnings miss on the consumer and how much of it is more seasonal stuff. And try to see if we can derive some conclusions from that based on the health of the market and the health of Q3 earnings that we have to get through in order for the market to maintain any of its gains. So a lot to get into, a lot to talk about. We also got to recap the Elon Trump interview, which was very interesting. If you stayed up with me yesterday for like 3 hours to listen to that. So thank you everybody for being here. Let's start off with PP and So we beat across the board. Here is the producer price index data. Very, very, very strong beat across the entire board. Month over month, the market expected 0.2. We got 0.1. On core, the market expected 0.2. We got 0%. Year over year, the market expected 2.3. We got 2.2. On core, they expected 2.6. We got in 2.4. S&P 500 was up about 0.5% as soon as this data came out. I mean, you can't ask for better numbers. You really can't ask for better numbers in the context of PPI. This is the PPI the market wanted. This is the PPI the market needed to get. And this is what we got. Now, for those that don't know what PPI means, it's the producer price index. It's how much producers are paying to create the goods that we are consuming. So, for example, the producer of the Starbucks cup, because there has to be a cup that you drink your coffee in, that is built by a company. I don't know if Starbucks vertically integrates that, or maybe they do it, they outsource it through a different vendor, but there is a cost to producing that cup. And if the cost of producing that cup increases, then the price of coffee, the price that we actually pay for the cup of coffee, is probably going to increase as well to account for that cost. That cost coming down, a cost to create a laptop comes down, a cost to create an iPhone or a mouse starts to come down, then we pay less as consumers for those products. I think the CPI, and I was shocked yesterday when I saw the numbers that Wall Street put up. I think CPI is coming at 2.8%. CPI, if you take a look at the estimates right here, and PPI kind of confirms to me that CPI is going to be pretty good. Wall Street thinks we're going to get 3%. So Bank of America, Barclays, Deutsche Bank, Citigroup, Goldman Sachs, Jefferies, Morgan Stanley, all of them think, with a caveat of a few of them think 2.9, all of them think we're going to remain unchanged month over month. Remember, last month it was 3.0. And we're going to come in again at 3.0. Now, last month, I predicted we would come in at 3.0. Wall Street was predicting 3.1 to 3.2. So I felt it would be better. I still think 2.8 is a possibility tomorrow. I'm very surprised that the big firms, either they're just setting this up because they want to sandbag it so that they can justify buying the S&P if CPI comes in much lower, or they genuinely think inflation was flat in July. I think oil is what gets us down. I think oil was almost, $72, $73 down from about 85 for the entire month of July. I don't see how headline CPI goes unchanged. Definitely don't think it's going to reaccelerate. If we go above 3%, we're screwed tomorrow. The market's going to tank. I don't think that's going to happen. 2.9, I think is very possible. 2.8 is my guess. Maybe I'm wrong on that, but 3.0, I don't know if the markets would like that or hate that, because if you get 3.0, you're not seeing any change for inflation before the Fed cuts. And then the Fed's asking themselves, well, why are we so eager to cut if we don't have enough downside to inflation? Now, granted, the Fed needs to cut because the unemployment markets are going to get pretty bad. We saw a taste of that 2 weeks ago if they don't cut. But I think a 2 handle on CPI would make it very easy for the Fed to at least justify 25 bips. So I think we get a 2 handle. The PPI today was absolutely phenomenal. It was, you couldn't ask for a better PPI. I mean, really, you couldn't ask for a better PPI. Again, if you're just joining, we beat on every single level. So I think CPI is going to continue to match that. Again, month over month, beat by 0.1%. Core month over month, beat by 0.2%. Year over year, beat by 0.1%. Core year over year, beat by 0.2%. Like, you're really going to ask for a better print. And we got a decent print on CPI. We'll talk about Starbucks and Chipotle in a second. But yeah, I think tomorrow 2.8% happens. And if that does, I think the market benefits. So let's go around the market and see what we got. S&P up 0.5%, 536 right now. NVIDIA, wow, I didn't even see that, up 3.5% on the day. NVIDIA's at 112. It hit 113. SoFi's up 1.2%. Robinhood's 1877. Robinhood hit 1890 at one point, up 1.24%. Again, Robinhood got upgraded to $32 yesterday by Bank of America, and Piper Sandler upgraded them to $23. So that benefited them as well. Target is up 0.4%. Palantir, $29.70. Let's see if we can make another run to $30. I'll talk about the new Palantir partnership in just a second, but that's really good news for Palantir. IWM really not seeing that much momentum. It's up 1%, but I mean, you would think a cooler PPI helps IWM and small caps a little bit more. Not really seeing too much love. Tesla up about 1%. Amazon up about 1%. Starbucks up 13%. We'll talk about that in a bit. Coinbase is up 1%. Apple's up 0.33%. Bank of America's up a little bit. TFC's up. Oh, the regional banks should be up. KRE, the ETF is up 1%. XLF is up 42.35, up 0.4%. Bitcoin is down, basically flat, but down 59,000. And then the NASDAQ QQQ, there you go, up almost 1% at 455. If this S&P starts recovering to 540, we're 4 points away. And then next thing you know, end of August, we're 545. Remember, the top was 565. And then you get, a good NVIDIA earnings, and that pushes it to 550. I mean, we're basically going to have recovered most of the losses that we had throughout the month of July. So it's slowly creeping its way up there. And because it's slowly creeping its way up there, it's going to be pretty exciting to see if the S&P can continue gaining momentum. How old are you, Mitt? I am 26, but basically 27, dude. In 2 months, I'll be 27. So I don't even consider myself 26 anymore. I will officially be 27. 27 to me is like officially late 20s. 26 is still like, okay, you're kind of a kid. 27 is like, no, you're about to be 28. And then when you're 28, you're like really about to be 30. Then when you're 29, it's like, dude, you're basically 30. And then you're 30. So I am entering into, basically in my head, I'm entering into my 30s. That's what's happening. So that'll be happening in October when I turn 27. In general, I'm probably going to sell after NVIDIA earnings. Someone says in the chat, look, I think NVIDIA earnings is going to crush it. I do think it could be a sell the news event, but this PPI data, along with probably good CPI data plus a monster NVIDIA earnings, look at that, NVIDIA 113. Maybe NVIDIA really shows up and 130 becomes the sort of normalized price that NVIDIA trades at after those earnings. Now, again, it's going to have to be raised on guidance, and they're going to, if they raise Q3 guidance, that means CapEx probably is good across the board for all the other hyperscalers, but we're going to need to see NVIDIA continue to raise that guidance in a meaningful way. And if that happens, I think NVIDIA will put up some decent numbers. Okay, cool. So that's what we had in the context of PPI. We'll go to some more macro stuff. We have a lot to talk about with Home Depot, Starbucks, Chipotle, etc. Let's go to the new Palantir deal. So once again, Palantir signs another deal. We had 4 deals last week. We had earnings last week. Stocks up 45% from the lows. Momentum is not stopping at all in the context of Palantir. This is what we got this morning. Surf Air Mobility announces a plan to form a new venture, Surf Air Technologies LLC, and enters agreement with Palantir Technologies to power the modern operating system for the advanced air mobility system. The companies have been working together since 2021, deploying operator software used by Surf Air Mobility. Surf Air will leverage Palantir's AIP to build a unique and transformative set of software tools for regional air operators and elected aircraft OEMs. This is really exciting stuff. So thanks to Palantir, since 2021, Surf Air has achieved 25% revenue per trip, creating the foundation for the Surf OS, or their Surf operating system. Now, for those that are not familiar with Surf Air, here's their website. It is eVTOL flying. It's kind of similar to Lilium, except Palantir doesn't work with, they don't invest in Lilium anymore, but I do think they still have an equity stake in Lilium. So you're talking about scheduled chartered flights all across the United States. They've done 75,000 flights in 2022 to 48 destinations, and they are trying to transform regional flying through electrification and software being the part that Palantir is supposed to help out with. So the goal here is to leverage Surf Air's vertical expertise in regional air operators to tackle the immense market opportunity. There is a $9 trillion TAM by 2050 in urban air mobility, $75 to $150 billion TAM by 2035 in regional air mobility, and there's 12,000 aircrafts in the United States. All of this having to do with kind of the Uber for air, which Archer Aviation is going after. I think Uber themselves are going after this. Surf Air Technology is another company that's putting their hat in the race. So what does this tell us? As Arnie puts right here on Twitter, Palantir doesn't only provide software to improve operations, it helps its clients build new businesses as the tech infrastructure to develop and sell the technologies. This is a foundational piece of software built on a business that's launching their entire new operating system on top of Palantir's Foundry and AIP, continuing to show me and reinforce the diversity of deal flow that Palantir is able to get is very, very exciting. So you had Wendy's powering their supply chain. You had Microsoft powering OpenAI Azure LLMs into the DoD via classified environments because Palantir is an IL level 6 security provider. Then you had the Air Force contract for $8 million. Then you had the South Korean defense contract working with Palantir for unmanned vehicles, unmanned surface vehicles. And now you've got Surf Air. I just think the amount of deals they're getting and the types of deals they're getting are very exciting, very interesting. And I don't think these deals are going anywhere. I think they're only going to be reaccelerating over the next decade. So Palantir right here, I don't think this deal is going to get us back to 30. I think if we get back to 30 today, it's going to be primarily macro driven because Surf Air is just not that big of a company. But it is exciting to see that they are once again working with Palantir and they're choosing to extend their relationship. The final thing I'll say on this right here, Surf Air again started working with them back in 2021. Now, 3 years later, they're signing a extension with them to build an entire operating system on top of AIP and Foundry. I think that's going to happen with Wendy's. I think that's going to happen with Microsoft in the classified environments. I think they're going to keep landing into these deals and then eventually expanding in a pretty dramatic way as they prove their value over the course of a couple of years and then just get more attention and want these companies to continue working with them. Now, Surf Air Mobility is a public company. They're down 15% in the pre-markets. SRFM. This is a very small company. This is a $24 million company. Honestly, it should not be public to have a market cap of $24 million. So I wouldn't recommend anyone play with this. I think it had a little run in the beginning of the year. Yeah, it went to 40 cents after initially they started working with Palantir and that was announced. But it's back to 24 cents. This is not a stock I would trade or get, even mess around with. But Surf Air is a cool company that one day can become a very big company. And they're using Palantir to try to become a larger company. So exciting stuff in the context of Palantir. Surf Air has been with Palantir for a little while now. Yeah, basically since 2021. And now it seems like they're going to be working with them a lot more. Didn't they improve profitability by a significant amount since they initially partnered with them? Correct. They improved it by 25%. So, dude, it just makes sense. I think a lot of there's another Toronto company called Air Matrix. A lot of people forgot about. They're a drone company that started working with Palantir back in 2022, or I think early 2023. And again, a lot of these companies are not really going to succeed and become massive companies. They're not like BP or Airbus, but they have a chance to become massive companies. And if they have a chance to become massive companies, you want them to be working on Palantir software, kind of reaffirming what Shyam Sankar said in 2022 at a JP Morgan conference, which is that Palantir will be the AWS for developers over the next decade. So not from a cloud compute perspective, but from a data analytics and building your business on top of another platform perspective, which is essentially what AWS, GCP, and Azure allow. That's what management believes Palantir will be able to do what they need to do. So exciting stuff in the context of Palantir. Okay, let's talk about Starbucks and Chipotle. Now, this story kind of blew my mind this morning. This is just very weird, but it ended up happening. So Starbucks stole Chipotle CEO. And as a result, Starbucks stock is up 14%. I guess this is why CEOs are so important. I mean, the market thinks if you are a strong CEO, you can fundamentally transform a business. Starbucks was a business that needed to be transformed, and it was time for a change. So the Starbucks CEO, or sorry, the Starbucks CEO, who's the former Chipotle CEO, who's the new Starbucks CEO, doubled Chipotle's revenue. He increased profits sevenfold, all of this since 2018. And he made the stock go up 800%. So we're talking about a guy who doubled revenue, increased profits 7x, and drove the stock up 8x. Now, Chipotle is down on this news by 7%. They were down 10%. Now they're down 7%, $51. They were at 55. And Starbucks is up 15%. My question is, how much money did they pay the former Chipotle guy to go to Starbucks? Like, genuinely curious, because why would you leave Chipotle if you've got a really good deal? You know, you've obviously are a respected CEO. You've done a phenomenal job since 2018. The only reason you leave is because you want another challenge, something more exciting, or Starbucks offers you a very big bag. And I would imagine they went up to the guy and they were like, hey, we're going to give you a lot of money to like redo Starbucks. So now he's in Starbucks. My question is, I still don't know exactly what he's going to do to change it. Now, obviously, he's the CEO. He's transformed Chipotle, so he probably knows a lot about managing businesses in a meaningful way, especially in the restaurant industry. But I think at a fundamental level, Starbucks is too expensive for what they're charging, and the user experience is declining at a Starbucks, along with increased competition. Now, I don't think the increased competition is necessarily hurting Starbucks that dramatically, but it will start to. So I think he's going to need to have some radical reforms. And remember, people forget in 2015, Chipotle had a food virus breakout. I believe it was the E. coli breakout. I might be getting the virus wrong, but there was a lot of food that was infected. And I think a couple people got like bad stomach viruses from eating at Chipotle. They had to navigate that over the course of 4 years because people just didn't trust going into Chipotle for a good amount of time. And he figured it out. So this guy has been through controversy. He's been through struggles. He's been through like the pains of running a restaurant business, specifically with the health concerns, the public health safety concerns. So I feel like he's the right guy to navigate this. And obviously the market feels that as well, with Starbucks being up 50%, 15%. But we're going to have to see if this really ends up playing out. I'm looking forward to an interview of him actually talking about what the heck he's going to do. You know, Starbucks is very interesting. I said yesterday that I was looking at Starbucks. I did not know that they were going to do a CEO change overnight. But let's see how much the market even keeps up this momentum. I mean, it's up 13% right now. It seems like the market's excited for the new direction. Elliott still has an activist stake in Starbucks as well. Maybe that changes things. And maybe they got Starbucks on the right track. If we look at the 5-year chart on Starbucks, we peaked at 118. 118 in 2021, fell all the way to 65, then peaked right back at 111 back in May of 2023. And then since then has fallen now at 87. So been through a tumultuous journey with Starbucks. And we will see if this new CEO can change things. Bay Ray puts in the chat, DoorDash partners with Max, Warner Brothers Discovery, to introduce first ever streaming benefit for DoorDash Dash Pass members in the US. Interesting. So HBO Max and DoorDash partnered. Let's look at DoorDash's stock. Up 1% on the news. Some of these promotional partnerships are interesting, like when one company from one arena partners with another company from another arena. The one that I thought did it the best was Spotify and Hulu. They had a $5, I don't know if they still have this, but they had a $5 per month membership to get access to Spotify and Hulu. I remember I took advantage of that when I was in college in like 2017. And for $5 a month, dude, like to get all the music you want and Hulu content, that was a pretty good deal. And I think they got a lot of people to sign up from that deal. And then eventually they raised the prices. So it's always interesting to me when two companies from totally different sectors like HBO Max and DoorDash partner together to try to do some type of unique collaboration. Disney and Verizon did that as well. That's how I even got Disney Plus free for a year back in 2019. And then I never canceled it since then. But yeah, maybe that has impacts on DoorDash as well. Samuel, good morning. Thank you for being here today. Okay, so that's what we had in Chipotle and Starbucks. Let's talk about Home Depot. Now, Home Depot had an earnings. The earnings weren't amazing. And that is why we are seeing a little bit of weakness right now. Let me see if it recovered at all. It was down about 3%. Home Depot. Yeah, look, it recovered a lot of it. So I have mixed thoughts on Home Depot. It was down from let me see the intraday. It was down, like it went down to 326, dude. Like it went from 350 to 326. Now it's right back here in that 344 range. They did say the thing that we didn't want them to say, which is that the consumer is weakening. So here's the exact quote that they said. Again, I kind of think some of these CEOs are using this whole consumer narrative to justify stuff. But I also think I don't think Home Depot has a reason. I think Home Depot is being truthful here to an extent because it's Home Depot. It's a primarily retail run business. So if they see consumer weakness, then maybe there is. So CEO says during the quarter, higher interest rates and greater macroeconomic uncertainty pressured consumer demand more broadly, resulting in weaker spend across home improvement projects. I mean, I guess so. The higher interest rates, to me, we've had higher interest rates for a year now. So I don't know why he's saying higher interest rates created, more consumer issues, unless like finally we're at a tipping point where after a year, these interest rates are getting to the point where consumers just can't afford more of these goods. But they're saying the consumer is a bit more weaker. Now, the actual revenue, $43 billion in revenue, $43.2 billion in the second quarter, increase of 0.6% from year over year from the second quarter last year. Total sales include $1.3 billion from the recent acquisition of SRS Distribution. Operating income was $6.5 billion. Operating margin was 15%, which is down year over year on both levels. The operating margin is down by 0.3%, and the operating income is down by about $100 million year over year. Net earnings for the second quarter were up $4.6 billion or $4.60 per share. CEO also says during the quarter, higher interest rates and greater macroeconomic uncertainty provided consumer demand more broadly or weakened consumer demand more broadly. However, the team continues to navigate this unique environment while executing at a high level. I would like to thank our associates for their hard work and dedication. So they put up good numbers. They were not monster numbers. And I think now the reason the stock's recovering is because we got this PPI data that was not too bad. And the market is trying to reconcile, okay, so Home Depot says the consumer's weak. A bunch of these other companies have said the consumer's weak, but we also just got PPI data after Home Depot reported saying that PPI is the lowest it's been in a long time. It beat across the board. If you're just joining month over month, year over year, on core, on month over month and year over year as well, it came in at least 0.1 to 0.2% lower than the market expected. So now, if that means that CPI is going to come in much lower than what the market's expecting tomorrow, the Fed's going to lower prices, and that's going to help the consumer, and that's definitely going to help Home Depot. That can also probably lower prices as well and not have to continue to price gouge. That's another thing around why I think CPI is going to come in lower tomorrow. Retailers are slashing prices. Target slashed prices. McDonald's introduced a $5 meal that they haven't done in a long time. Burger King, you can get 2 Junior Whoppers for $5. Walmart is slashing prices. Home Depot is probably going to slash prices. You see a lot of retailers that are realizing they can't price gouge. Best Buy is getting rid of prices. They can't price gouge anymore because consumers are just not going to pay for this stuff. And that's what the Fed wants to see. That stuff is finally happening, which is if it happened in July, I think CPI should be a lot better. I also think, the one thing I think that can increase maybe is airfare, because a lot of people traveled in July. But conventionally, if that many people are traveling, you should have lower prices because there's more demand. So cost comes down. So I think that's like one of the only metrics I think that could really increase dramatically. But I also don't think it will. So I think we're going to get a great CPI. And if we get a great CPI after a great PPI, that is going to help companies like Home Depot that are saying they're struggling, along with Disney, from the consumer. And that's important. Open Size, this is a great comment from Open Skies right here in the chat. If you raise prices too much, just say the consumer is slowing. This is why I'm skeptical to believe Home Depot, Nike, Disney, all these companies, because a lot of them jacked up the prices. So the only company that can really jack up prices and not think too much about it is Apple. And even Apple has been, obviously slowing and showing 1 or 2% growth year over year. But Apple can probably increase the prices and people will still pay because it's Apple. But outside of that, dude, if you're Home Depot and you increase the prices of like a screwdriver by like 20%, a lot of times people will look at that and they'll be like, I'm just going to Lowe's, right? Or I'm just going somewhere. Like, I'm not paying this amount of money for this, this amount of this type of a product. It's not that foundational in my life for me to pay this much. So I do agree. A lot of these companies jacked up prices. Now they're saying the consumer's struggling. Well, now it's time for you to lower those prices. And if we see the lowering of those prices after a good CPI and PPI print, we are really going to get a good CPI print in September. And if that's the case, the Fed is going to have no choice but to cut. And then it's just a question of how the market responds to that. So we are going to see how this ends up playing out. But I think things will be okay. Car prices came down too as well. Yep, car prices are probably going to come down. I don't think we get jobs data until next Friday. I think we get some report this Friday, but next Friday, I think we get another jobless claims report. and private payrolls report. It might be this Friday, but we're going to get more jobs data soon. And as long as the unemployment is not as bad as it was right before August 5th, then hopefully the market is able to realize that we might not be in a recession. All right, let's hear from one of my favorite analysts, Gabriella Santos from JP Morgan, and her perspective on what's happening right now and if this is a time to reposition your portfolio based on the market drawdown we saw over the past month.
Is just technically driven, which we think a lot of it was, that really amplified the moves. So the question now is how much of that technical unwind is still left, especially of the yen carry trade. And it's very tough to put numbers to that. But there's some estimates that it's about 65% of the way unwound. So the worst of the technical pain is behind us, but it doesn't mean things can't still be a little bit choppy from here. And then the second bit is what has actually fundamentally changed? And is there a need for an actual positioning adjustment? And there, I think the macro didn't change dramatically. We think recession fears are overblown, but the balance of risk has changed. And we do think it does make sense for the Fed to bring forward the rate normalization, much more so than before the jobs report. So the number one thing that's changed for us is we have got to add duration. Rates are clearly coming down fast. A lot of investors are positioned short duration, and now is the time to add. And we think 3 to 5 years makes sense.
So what makes you think recession fears are overblown, and yet at the same time, you think the Fed should push forward its rate cuts?
Because I think from their perspective, right now they're sitting at the top of the mountain here with restrictive rates. I mean, we can argue all we want how restrictive they are, but clearly they're having an impact on housing activity, on big durable goods purchases, on the lower income consumer. So they feel like they need to get back closer to neutral rates, which estimates point to around 3%. So if the economy is downshifting, it's slowing. If the momentum of the labor market is slowing, the balance of risk makes it so that they should get to that 3% neutral rate as soon as possible. And really, it's still a normalization phase of rate cuts. It's not an easing phase, which would then occur if indeed we get closer to a recession. So you can have both, still an okay economy, while you still have 200 basis points of rate cuts over the next 18 months.
So do you feel that the equity markets on the equity side versus the economist side, do you think that there's a little bit of being off sides here, though? Because from the equity perspective, as you said, it is the belief that a lot of this was technical.
Yes.
And it was not necessarily, it was like a little bit of growth scare, but most of it was technical because we're basically, okay, now we're up 3% since Monday. And yet on the economist side, everybody, including JP Morgan, I know that's another part of the house, tripped over themselves to bring forward the rate cuts. I mean, say 50 basis points in September and November, which is the JP Morgan view, just as an example.
And to raise their expectation of recession as well.
To 35%. That is dramatic.
So I think 35% recession risk still means...
You guys are saying her eyes are crazy. I like her because her eyes are crazy, dude. I mean, look at that. She doesn't blink. She's just like straight focused on where the hell this market's going. That's how I like my analysts.
65% no recession risk.
Okay. Right. But so how about the 100 basis points in cuts by the end of the year?
To bring forward, because we're so restrictive, we need the Fed, we agree with that other side of the house, that the Fed should bring forward those rate cuts, not because recession's the base case, but because the momentum is slowing, recession risk has gone up, and they should get closer to neutral as soon as possible because there's still a very restrictive rate.
And because if CPI comes in at 2.8%, you're going to have the federal funds rate at almost 70% of the CPI headline inflation. Real inflation probably is closer to 2% if you look at Trueflation and their numbers. So you can't have interest rates double what inflation is. Like, it just doesn't make any sense. So I think that is why you pull forward the potential of a recession, and then you cut rates to like hopefully not have that recession.
Jobs report is why. Because that's what I find so interesting. The jobs report is why, and then the jobless claims report, which nobody ever talks about. All of a sudden, that was, okay, we're off to the races again. We're fine.
And I think it's the whole mosaic of the labor market. And Chair Powell had talked about this on July 31st before the jobs report, right? That they were seeing several signs of some slowing in demand for creating new positions and for a slight rise in unemployment claims. That's all, right? The mosaic was just showing the labor market was slowing. That's it. And then the jobs report confirmed that. So I think the Fed had already prepared us a little bit before that they see the balance of risk as such that it is important to start reducing the restrictiveness. And I think for the equity market, if we take a look at what suffered the most during the sell-off from July 16th until the Monday low, it was the Mag 7, which fell 14%. The rest of the
She's right about that.
Market fell 4%. So to me, the economic change, the rates change impacted the bond market, rightfully so. For the equity market, it's much more a story of good, not great enough tech earnings, plus the technical factors, and that's appropriate. One read-through for the equity market is previously we had that rotation to small caps, and we were saying it's too early for that. The economy is slowing, and that's one thing that we don't see coming back. There's still plenty to play for in large cap within some quality cyclicals, but without having to go full small cap.
I think she's right, dude. I think a lot of her analysis is right. To boil down her analysis, she's saying the Fed needs to cut rates because you cannot have double the CPI on the federal funds rate. And then on top of that, if the base case is not a recession, but that is something that could happen by being too restrictive for too long, then that warrants a rate cut. On top of that, she's correct about her last statement about Mag 7 leading the majority of the correction, which I thought, quite frankly, was very healthy. We needed a Mag 7 correction because a lot of valuation, like Apple was at almost a 40 PE, and they're not growing. Like some of this stuff becomes stupid at some point, and that changed, right? We had that correction. So now the slow kind of escalator step up back to where we were as we took the elevator down, I think it created a magnificent buying opportunity, and it really helped unwind a lot of the froth in the system. Speaking about her analysis on the carry yen trade being unwound for the majority of parts, Goldman Sachs today said 90% of this carry yen trade is done. So here's a note that they put out to their clients. With regards to the yen carry trade, our FX strategy teams notes that based on the CTFC weekly positioning data as of August 6th, net shorts amongst non-commercial investors had fallen to just 1 billion, because you have to be shorting the yen when you're doing this trade, from a peak net short of nearly 15 billion just a few weeks ago. So for anyone that's really concerned about the yen carry trade, again, this data is not the only data to look at, but if net shorts were nearing 15 billion in mid-July when the market topped, at least short-term topped, and now it's 1 billion, it means 14 billion of those shorts left, whether they got liquidated, whether it got covered, whether people took a small profit, a small loss on it. It seems like this carry trade is done. On its own, this statistic suggests that around 90% of the yen carry trade unwind could be done already. And the VIX spiked on Monday, August 5th. That's probably when a majority of that 14 billion started to get liquidated and people just started selling out. I mean, again, in its most simplest terms, why did Palantir go to 20? Why did Meta go to 440? Why did Microsoft go to 385? If you were short the yen and you got called on your short when Japan raised rates, you had to sell U.S. assets, equities that you were investing in from taking the money from shorting the yen and putting it in those assets, and you had to pay back the loan. You had to pay back the interest, and now at some level a higher interest based on the raising of Japanese rates. So a lot of that selling was done, and then people stepped in. So when Microsoft got to 385 and some random dude in Singapore who was shorting the yen going long Microsoft realizes he's about to get liquidated and he sells all of his Microsoft to pay back everything that he needed to owe on the carry yen trade, some random guy in Japan wakes up and says, "Oh, this guy's going to sell Microsoft at 385. I'm going to buy Microsoft." And now Microsoft's at 411 right now. So it's really interesting because if the earnings growth wasn't resilient enough to justify buying Microsoft at 385, Microsoft right here at 409 right now, then Microsoft would be below 385. But a lot of people stepped in. Same thing with Palantir, right? Palantir fell to 20. I'm sure a bunch of people were short the yen, long Palantir, and they decided they had to sell some of their Palantir to cover up their short. And a lot of people who had some dry powder, they bought Palantir on that dip. So I think from that perspective, if the carry yen trade is unwound, if the broader inflation narrative, if you're just joining, PPI came in pretty well this morning, is starting to unwind as well. Then we're going to get a rate cut, and I think we're going to have a pretty good end of the year. I am very curious. Here's my next signal: when Meet Kevin gets back into the market. Why? Because whether you like him or not, he has had some pretty strong bearish theses. This is the PPI numbers for those that are just joining over the past month. And for the majority of the half of the July, he was correct on being bearish, right? And like if you went short QQQ, you made a lot of money because QQQ went from 500 to 420. So I am curious when he decides that there are enough factors to come in and say a lot of the problems that the market's looking at is done. It's not going to be an issue anymore. I'm also curious about Dan Niles. Dan Niles, big analyst, says, hey, September is when we're really seeing the bottom. We haven't really seen the bottom yet. I'm curious when he decides to change course and say, actually, no, the bottom's in. Because the thing is, if you're waiting for the S&P to bottom again at 507 and we have an end of year rally, you're going to miss the whole rally. So it's very interesting, dude. You've got a lot of sophisticated, people out there saying, we don't think the worst has happened yet. But if the worst has happened, i.e. VIX spiking, S&P hitting 507, down 10%, NASDAQ hitting 420, again, names like Microsoft going down almost 30%, and then the carry-in trade not being an issue anymore over the course of, at least until Japan raises rates next, which hopefully is not for a long time, you might end up missing the rally. I mean, what would get the S&P back down to 507? We're at almost 540 right now. So we're looking at another 5% decline. What would unemployment would have to be worse, like really bad? And the July numbers, a lot of that was tainted by hurricane as well. I'm not saying the numbers were amazing, but you could probably have a less of a miss if the hurricane didn't happen. And so that, might have juiced up those numbers. CPI is going to be great tomorrow. PPI was great today. What gets us there? World War III. So World War III might do it. The problem is it kind of just seems like fake threats right now. Like Iran did not attack last night, and they informed the United States that they were not going to attack after informing them in the beginning of the day that they were going to attack. Maybe the attack is going to happen today, but like a lot of these threats that Iran is putting out, we haven't seen them come to fruition yet, and hopefully they don't come to fruition. But World War III obviously is always going to be a risk. If World War III happens, then, stocks are the least of our worries. But it seems like Iran even knows, hey, like if we mess with them, we're going to get the shit punched, like we're going to get our shit blown out. I think even Iran knows that they are not powerful enough to mess with the United States or our allies because they know what's coming for them. And I don't think they want to deal with that, especially given the sanctions, the oil freeze. Like I think the rest of the year, we're going to be all right. Geopolitical stuff is not going to be the best, but I don't know if it's necessarily going to be the worst. So from that perspective, that is my entire bullish thesis. I gave my bearish thesis on Sunday. My bearish thesis is very simple. I think if Mag 7 spends too much on CapEx and we see no revenue, or they stop spending on CapEx because the consumer comes down, that's where you get a meltdown of the AI narrative. But I don't think that's necessarily going to happen because I do think NVIDIA earnings are going to prove that AI is real. They're going to remind us how real it is. SMCI earnings showed that guidance was going up. TSM earnings showed that, or TSM July numbers show that revenue is up 44% month over month, or year over year. It's just very hard to believe that NVIDIA doesn't show increased levels of revenue and guidance, which means all the hyperscalers are going to keep spending on GPUs. I think we got a bull market on our hands, and I think we went through a pretty nasty correction. I don't think August is just going to go straight up. I think we'll still be choppy throughout the rest of August, but I mean, if you were going to construct a bull thesis after a pretty nasty drawdown, I feel like that's how you would do it. And it seems like that's how a lot of the banks, JP Morgan, Goldman Sachs, Piper Sandlers of the world are thinking about it as well. Are you guys making fun of how I say thesis? You guys know the S and the H. I can't say thesis. It's very hard. S and the H, Massachusetts, facetious. I can't say thesis. So of course, thesis was not going to come out correctly as well. So that's what we have right now. Why didn't CNBC warn me about NVIDIA going up 7% in 2 days? What did they get paid for? Dude, I did not expect NVIDIA to have the run they had yesterday. That was surprising. And the NASDAQ was flat yesterday, and NVIDIA still went up. So I think NVIDIA is going up primarily because the market's just excited for earnings. And at the end of the day, we know NVIDIA is going to put up big numbers, and all the little panic we could have until then is whatever. Once they put up the numbers, the market kind of knows this is the best company you want to invest on. You want to bet on. Okay, Trump and Twitter. So and Elon, I'm going to do two simple recaps. I don't want to spend a lot of time on this because my takeaway was if you hate Trump, you hate him more. If you love Trump, you love him more. That was the extent of the conversation. There are two sound bites I got from this podcast that I had to sit through for 2 hours last night. If you were with me, you saw me doing a lot of random things near the end because I got a little bored of it. But this is two of the headlines. So this was Trump actually talking on Twitter. There's him with the Twitter Spaces. First on Tesla. This is the only thing he said about Tesla. You know, you do make an incredible car. Now, that doesn't mean everyone needs an electric car, but you do make an incredible product. Elon really didn't bring up Tesla at all. Trump brought it up randomly. And the extent of what he said is, hey, Elon, you make a great product, but not everyone needs an EV. And Elon just kind of didn't respond to that. So that was the only soundbite we got in the context of Tesla. Number two is Trump saying, so I know you love this AI. This is actually funny because he said this AI. Well, AI requires twice the energy that everything else requires. So we'll need to drill hard. We'll need to double what we produce right now. I thought for investors, this was one of the things that was interesting because whether Trump or Harris wins, energy is going to be a crucial part of AI. We don't have energy. We don't have AI. We can't train trillion parameter models. Like, it's not going to happen. So I think everyone's portfolio to some extent needs to be long energy, even if it's only 1 or 2% of your portfolio, because it seems like energy, whether it's Exxon, Chevron, Tesla, which I think is going to be, an underrated energy play. We're already seeing their energy numbers go up 100% year over year. In terms of revenue growth, I think they're doing like $4 billion in revenue last quarter on energy. Next era, there's a lot of good energy names that I think we all need to look at in a meaningful way. I don't think you need to rush to buy energy right now because the AI data center build out, it's like just beginning to happen, but it's something that even I need to think about. I don't really have enough energy exposure. And I think Trump, whether he baby drills or whether it's Kamala Harris, who's going to get excited about energy is something that is important to, at least in my opinion, have a segment of the portfolio dedicated to. Now, the easy way to go long energy is obviously Tesla, because I think they're expanding dramatically when it comes to energy. Tesla right here at 199, but there's probably a ton of other underrated plays. And if those underrated plays are interesting, then we should see a lot more momentum with energy, just like we saw a lot of data center build out. Vertiv was one of those stocks that benefited uniquely from the data center build out. Yeah, look at this. It's up 59% year to date. I heard about this one a while ago. I never ended up investing, but this thing right here, uniquely data centers helped them. They peaked at $106. Now they're at 72. Over the past year, they're up 110%. Year to date, they're up 59%. So I think outside of the Mag 7, which a lot of the opportunity, if you want to double or triple, I think it's going to take a decade. Like, some people forget, Microsoft is $3 trillion. To get that to double, you're looking at a $6 trillion company. Apple, it has to be $6 trillion. Even Google, it has to be $4.5 trillion. A double in those names is not easy, dude. Like a double in Palantir is way easier, from 60 billion to 100 billion, than a double in Microsoft, Google, Meta, Amazon. So if you want those types of gains, I think some of the energy names will be interesting to at least look at. And that would be exciting because they're going to catch a bid if AI continues to maintain momentum. David, thank you for the $27 super chat. Hey, Superfan Amid, aka the world expert in all things related to aliens and UFOs. I'm not an expert in aliens. Do you have any thoughts on one of my small growth stocks, Aspen? I don't know about this one. If anyone in the chat has any thoughts on ASPN, let me know. I'll put it on my list and I'll go into it. Market cap 1.78 billion, so it's a small cap. Price of sales of 7, not profitable. Max chart, it peaked at 66 in 2021, went public in 2014. Looks like the PayPal chart, dude. This looks exactly like the PayPal chart. PayPal peaked at like 300, then came all the way back down. This is at 23. No, I don't know about this one. I'll put it on the list. If anyone knows, let David know in the chat. 77 million shares outstanding. So definitely a small cap. I'll look into it. I'll see if there's anything interesting in ASPN as well. Looks like my options returns. Oh boy. All right. So we've got a minute until this market opens. Actually, we have 30 seconds. Let's put all eyes on Palantir again to start the open. 29.85, 15 cents away from trying to get back to that elusive 30. Let's see if it happens. We touched it yesterday, then it went away. Because the market, well, not the market really came down, but in general, we saw a little bit of a drawdown. So Palantir fell 2%. So let's see today if we can reclaim $30 on Palantir. Here we go. Thank you, everybody, for being here. Tuesday, August 13th, 9:30 a.m. The stock market is once again open. Wake your ass up. Here we go. Palantir, 29.72, up 1% on the day. Again, if you're just joining, PPI data was really good. So I think the macro is going to help a lot of these different stocks today, and we'll see what ends up happening. Robinhood, 1866 on the day, up 0.64% or 0.54%. Rumble, up 2%. It was up about 6% yesterday after hours. Right now, it's up 2.69%. Serve Robotics is up 10% this morning. BuzzFeed up 10%. They had earnings. They were up 30% after hours. Palantir, 29.78. 29.78, catching a little bit of a bid, topped out at 29.87 for a second, then came right back down. Microsoft at 410, Nvidia at 112, Nvidia up 3.3%. Tesla basically flat on the day, 197. DoorDash is up a little bit. Starbucks is up 17%. Wow. For those that are wondering why, they poached the Chipotle CEO and they brought him into Starbucks. I don't know how much money they gave him, but that dude left Chipotle where he had a pretty good gig, and he went to Starbucks. So, I mean, it's pretty incredible for a stock to be up almost 20% just on the CEO change, but the market's excited. So the market's giving Starbucks a bid right here. Palantir, 29.60. All right, we're getting a red candle. We're getting a red candle. Let me see on Palantir if where the resistance is. So there's really not a wall until 30. At 30, there's about 40,000 shares. So you got to get through 40,000 shares at 30 to kind of get back there. But until then, there's not a wall. We really just need volume. Volume is 2 million. Volume is lower than what it was over the past couple of days. By now, it would be closer to 5-6 million. So the volume is decreasing a little bit. And that's fair. I mean, after the stock goes up 45% in a week, you would imagine some people just kind of chill out, take some profits, and buyers are hard to find because a lot of the run has happened. But Palantir right here at 29.66. They also introduced a new partnership with Surf Air Mobility. You can go to the beginning of the stream if you want to hear that in depth. But Surf Air Mobility is going to be using their platform to build an entire operating system via AIP and Foundry for their eVTOL business, kind of like an Uber for air business. And so that was the new partnership that was announced today. The NASDAQ up 1.22%. S&P, look at that. S&P is up almost 1%, folks. S&P is up almost 1%. Not bad. S&P up 0.75%. Again, good PPI data will do that for you. Let's look at the Mag 7. We've got Microsoft green, Apple up almost 2% at 220, Google 166, recovering from that 152 low, Amazon almost at 170, 168, Nvidia again up 3%, and then Tesla basically flat, up about 0.38%, 198 on the day. And then Meta, dude, Meta is just, I mean, I think Meta has been one of the best stocks out of the Mag 7 this year. It's been so resilient. If you just look at their chart, I mean, look at this chart, dude. Started at 342, bounced up to 470 after the first earnings, then went all the way to 532, then came all the way down to 416, then bounced up back to 542. Then the August 5th meltdown took them all the way down to 442, now back at 523. I mean, the market wants Meta shares. Like, the market wants Meta. And so, you know, buying in that 440 to 480 range has not been a horrible deal, even after it ran up 40% from the beginning of the year. Because the numbers have justified it, the growth has justified it, and AI has started to show a massive impact in terms of their engagement in advertising. So Meta has done absolutely incredible this year. Crypto, we've got Robinhood at 1858, Cypher's up a little bit, MicroStrategy up 0.14%, Bitcoin stuck at 59,000. ETF inflows are starting to reaccelerate, but they're not really as good as they were a couple of weeks ago. Really, the momentum is just not there until I think we get a rate cut and we get some more liquidity. Yesterday, we had 27 million in inflows on the Bitcoin ETF. The day before that, we lost 89 million. The day before that, we got 194 million. And all of last week, we lost 237 million, 168 million, 148 million. So the Bitcoin ETF has not been producing as many results as people wanted, but you know, at least it's stabilizing a little bit more. DJT. So Trump stock is down 5%. That makes sense. Trump is back on Twitter. He is tweeting up a storm. He gained 1 million followers yesterday in one day. So when you gain 1 million followers on Twitter, I think you start to realize the power of Twitter. And I think Trump realizes that he needs to have more attention on Twitter. And so he's probably going to be tweeting instead of truthing, which is not good for DJT. So this one is just, I don't know what's going to happen to this stock. Still worth $4 billion, doing less than $1 million in revenue. But it's down about 20% from last week when it was about $32 because it seems like Trump is now focusing on Twitter. On sneakers, they had earnings as well. They're up 2.3%. Their earnings were okay. They didn't highlight any consumer weakness. For those that know this brand, kind of a competitor to Nike sneakers, a lot of people are starting to like their sneakers. Their sneakers do look pretty cool. I mean, I looked at their sneakers. I've never tried it on, but the design itself is very unique and different. But their earnings weren't like phenomenal or anything like that. So the earnings were relatively flat, nothing too interesting. One interesting stat from last night on Polymarket. Polymarket is an app where you can bet on, and it's an app where, Palantir's back to 30. What? We're back to 30? Dude, that was quick. What? 29.9. Whoa, that was super quick. All right, talk about catching a bid. I mean, it makes sense. There wasn't any resistance to 30. At 30, there's some shares waiting, but boom, there you go. Not bad. Yeah, now, I think we should get to 30 again. Now at 30, there's 3,670 shares. If we get the volume, we should get there. Okay, not bad. Let's see if we can crack 30. What I was going to say is Polymarket, which is an app you can bet on. Someone made $1 million yesterday by correctly guessing the words Donald Trump would or would not say during the Twitter Spaces. So again, Polymarket, you can bet on like literally anything. It's like the stock market for anything. You can bet on, the weather that's going to happen in New York City tomorrow, like random stuff. And these polls are factoring in Kamala winning versus Trump. Like there's all these different presidential polls. So a bunch of people bet a bunch of words that Trump might or might not say. And they gained a lot of money from that. For example, someone bet like $100,000 that Trump would say crypto during the interview. And because he was right, he made like $330,000. It's like just absolute crazy shit. But that is one thing that happened yesterday with the debate. Palantir 29.88, 1.7%. Again, very little resistance to $30. If it wants to go to 30, it'll go to 30. Like there's really not a lot of resistance here. If there's enough buyers coming in, then we should see $30 again. And then it's just a question of, can we maintain that level and normalize it? What is interesting that you're seeing 29.95 right here is people continue to buy in the high 29s. They just like Meta, they're ready to buy these shares and they care less about valuation. They just care more about getting exposure. So Nvidia 112 right now, that's up about 3%. Palantir 29.89. Robinhood 18.55 just went red 18.54. So Robinhood now red on the day by about a cent. Palantir at 29.90. GameStop's 21.99, Nvidia 112, Carry 52.88, Tesla 199, PayPal 64, Arc Innovation 41, SoFi 654, TFC 41, and Coinbase at 193. Eli Lilly is pumping today. Now they had a really good earnings last week. Looks like market's giving them back moment. Look at that. See, Eli Lilly topped out at 916 in the beginning of the year. Sorry, 966. Then they fell all the way to 718. They're right back to 900. Again, this does not seem like one of those markets where you would see this type of a massive rebound if you were going to give it all back. Like for all the people that was saying there was a dead cat bounce on August 6th, August 7th, August 8th, August 9th. I mean, literally on Friday, you had people saying this is a dead cat bounce. I don't know anymore if Nvidia going from 90 to 112 is a dead cat bounce, especially when most of the Japanese carry yen trade seems to be unwound. So I think for those waiting for this thing to continue to go back down, I just think it's a hard bet, because if you're going to be out of the markets, you got to really be right on the timing of this. I got to really be right on the timing. Palantir 29.82, SMCI, wow, another 4%. SMCI was up almost 8% yesterday, 563. That one's recovering a lot of what it lost on earnings. Bottomed at 478 after earnings, now at 563. People are buying this in a weird way because we know their operating margins are going to suck, but I guess people are buying it for the growth, and they think the growth is going to outpace the operating margins. The stock's also going to split, I think, at the end of August. So this will be $56 as after a 10-for-1 split. But right now at 564. Chipotle is getting clapped. Yeah, I would imagine. Chipotle, wow, dude, it's down 11%. That is so weird that Chipotle let their CEO leave. Like, don't they have like look at that red candle. Don't they have like some like non-compete policies or something to get this guy to not leave? But maybe it was a mutual thing. Maybe he was there for so long that he really wanted to move on in his career, and they were like, all right, you can, it's a mutual thing. We leave. But I mean, dude, 11% down because the CEO leaves is wild. Starbucks right here up 20%, bro. Starbucks is not a stock that moves up 20%. You're not supposed to, especially not off of a personnel change. I mean, the CEO hasn't even done anything yet. And he's just like, I guess that respected to be up 20%. So if you bought the dip on Starbucks, congrats. I don't know if this is a sell the news type of event. Obviously, the market's not thinking of it like that, but I am skeptical that it stays up 20% just because of a CEO change. And maybe that's what the market needed, along with Elliott taking an activist stake. Maybe Elliott is what got this guy into Starbucks. And that's how the market's responding to it now. The amount of people short Starbucks is mind-numbing. Yeah, I mean, if you went short Starbucks after they fell on earnings, Palantir 29.94 like 3 months ago, they already hit like a 3-year low. I don't know what was the incentive to short them again. So if you shorted them before Q3 earnings or Q1 earnings, it made sense. If you shorted them after, I mean, your short was what, from 75 to 60 if it would fall that low. And I don't know if that was the smartest thing there. On now, down 1.4%. Tesla at 200, up 1.4%. So Tesla catching a bit of a bid. Nvidia at 3% up. Palantir again, $29.93, just flirting with $30. And $29.97. It looks like we should touch it. Again, 0. Oh, there we go. Back at 30. There you go. Right back at 30. Let's see if it can hold. We're getting a bid at 30, $29.99, 30, 30.02. All right, here you go. Maybe we start getting back to 30. Here you go. 30 Dolores. Japan stopped raising interest rates. Correct. That is what has helped a lot of the market. There we go. 30.05. Now we're catching some bids for 30. Again, we went to 31.20 yesterday. Then we fell 2%. The problem is there's a lot of sellers at the high 30s, dude. There's a lot of sellers. They're ready to sell this. I mean, there's a lot of people that just do not believe that this valuation is sustainable at all for Palantir. And I understand that. I do think the growth is going to accelerate enough to the point where the market is able to buy it regardless of the valuation, because it's just one of those stocks where valuation is not the only concern. And again, the deals that we're getting day after day start to justify a lot more that the growth is going to be there. Again, I don't think Palantir deserves to be 30 just because of the story. I think the deals we're getting means that the growth is going to accelerate. So if the market's future looking and you're pricing in future growth, you're going to get future growth. You're going to get more government growth from Microsoft. You're going to get more commercial growth in the supply chain sector from Wendy's. Like, you're going to get more growth. So that is my thesis and then even if you get that growth, is a little overvalued and expensive. Yeah, of course. But it's one of those names that's one of the most expensive names in software for a reason. CrowdStrike used to be in that category. And it's because CrowdStrike put up the growth and it was a phenomenal company. So I think Palantir will be able to hold up a bit of that momentum. Thomas says valuation always matters over the long term. I agree. And that's why it's hard to be excited to buy Palantir at 30 if you already have exposure. Like, if you're new to Palantir and you don't want to miss the run and you can't time anything, then yeah, you DCA, right? And if you buy the top, which is 30, and it falls back to 25, you buy 25 and you get a DCA of 27, right? It is what it is, unless you're perfect at timing this stuff. But if you already have a lot of Palantir, you know that they need more growth to justify this. Palantir now really starting to break out a little bit, $30.20. And so you just wait for that growth to justify even more momentum. So I think that's kind of the two separate sides that are thinking of Palantir. Either you have no exposure and you don't want to miss it, which means you're going to pay a more expensive price, or you took the risk 2 years ago or even a week ago and you knew that this company was worth more than what the market was willing to pay. And so now you're being rewarded for it as the stock goes higher. But I'm thinking of making a video about this, $30.26 on Palantir. I'm going to make a video probably in the next couple of days, maybe even today, about the media effects compounding on Palantir. I genuinely think the media, CNBC, Bloomberg, etc., is going to talk so much about this company over the next 5 years. And that is going to be a way that it gets even more momentum. And that momentum is going to compound. And as that momentum compounds, more and more people are going to be. I think that's a real thing. And because I'm in the media business, because I built a YouTube channel, because I primarily talk about Palantir on my daily videos outside of the live stream, I kind of understand. I've seen the evolution of, 100 people caring about Palantir in 2021 to 100,000 people clicking on a Palantir video in 2024. I've seen that evolution. And so I just think the big media conglomerates are going to realize, hey, Carp is really cool. Sham is cool. AI, LLMs, this shit is really cool. It's Western values, defending the West. All this shit is what people want to hear about. Anduril just raised $1.5 billion. They're probably going to go public in the next couple of years. They're going to go public probably at a $20 to $25 billion valuation. And Anduril is building some of the coolest defense tech in the planet. They're working with Palantir. Some of their co-founders are former Palantir alumni. I just think there's so many narratives, so many storylines that the media is going to keep covering them. When will Palantir be in the S&P 500? Hopefully in September when they do the rebalance. I'm not counting on it because of the low institutional ownership, but if that happens, I think that's going to be very exciting as well for Palantir. And we're probably going to see, closer to 35 when that happens. What else do we have? What else? Palantir 30.26. It's holding 30, which is not bad. Scott says I sold my entire Starbucks position for Nike. Damn, dude. Where's Nike right now? That was, I'm not going to lie, dude. That was bad timing. Goodness, Starbucks is up 21%. I'm sorry about that, Scott. That was some bad timing. It's okay. It happens to all of us. You guys know me. I sold Neo at $3 before it went to fucking $60. That stupid piece of shit. But Nike at 76 right here, up 2%. At least this one's up. Starbucks still up 20% on the day. So Starbucks holding their momentum. When is the September rebalance? Let me check right now. I actually should check. Palantir 30.35. S&P rebalance dates. Because I need to know the exact date as well. So it's going to happen. Let's see. It definitely happens in September. I have to get the calendar now. Let me see if I can get the calendar, and then I will let you know exactly when it happens. ISRG. Okay, so we looked at this one a couple of weeks ago. ISRG, Intuitive Surgical. This one had great earnings. I didn't even know they had like robotic surgeries. This was really cool. They're up a little bit today. They were at the beginning of the year, they were 330. Now they're at 470. So I've not done too much of a deep dive on this, but we saw their earnings for the first time last week, and this one's very interesting. Market cap 165 billion, up about 1% on the day. Starbucks still up 20%. Palantir now up 3.35%, trying to crack 30-40 now as well. Chicken Genius bought at $7 and he sold at $9, for those that are wondering in the chat. And he made like 300 grand. I remember that screenshot because he bought a crap ton at $7 and he sold it at $9. And, $2 difference. He made $300,000. However, Palantir, there you go, 30-40. If you waited a little bit, even if you forget even waiting a year to get to 30, if you had waited like a few months, it would have been at like $18. So a lot of people got burned short term on Palantir. They made some money, but there was a lot more money to be made. You think ISRG will partner with Palantir eventually? That would be interesting. I mean, I wouldn't doubt it. I wouldn't doubt Palantir partnering with ISRG. Palantir right here at $30.45. Again, healthcare is going to be one of the fastest growing verticals for Palantir. I wish on the earnings they would give us a breakdown on which verticals are growing. They probably can't do that because it's too confidential. But healthcare, energy, defense, space, and logistics. I think the number one growing vertical right now for Palantir is logistics. I think the number two is healthcare, and I think healthcare will be the number one. Legacy IT infrastructure in hospitals is broken. And I do think that more and more we are going to see healthcare industries realize that they can't have these types of legacy IT platforms running their supply chain, their operations. Again, if you don't know the Palantir Healthcare partnerships, there's a Concordance partnership that you can look up. There's a Cardinal Health partnership you can look up. There's a Tampa Bay General partnership you can look up. There's a Mount Sinai partnership you can look up. Mount Sinai in January said they saved $1.5 million using Palantir in one department of one of their hospitals. And they have various hospitals throughout New York State. So one department saved $1.5 million in one hospital. They have many departments in many hospitals throughout the entire state. I mean, there's just so, and what do you think happens when Mount Sinai is like, oh, so Palantir saved $1.5 million in this one department. What if we just sign a longer contract with them and we expand them to all of our hospitals in all of our departments? That's like ka-ching, ka-ching for Palantir. That's a very sticky relationship. Mount Sinai is going to get a ton of ROI from that. And then boom, you've got another case study for Palantir to work with. Palantir also partnered with the 38th best hospital in the world, Policio Geminelli. I'm definitely saying that wrong, but that's a hospital in Italy. Like, I think healthcare is going to be one of the best verticals for Palantir. $30.46. We broke 30.50 for a second, up 3.8% on the day for Palantir. I'm saying Sinai wrong. I don't care. Okay. I don't care. I said it wrong in January. You guys made fun of me. You guys are saying it's Sinai. I don't care. I said Sinai. It is what it is. And that, like, I don't care. I don't care. I'm getting really tired of this correction. You guys are basically becoming dictators in the chat, censoring how I talk. And I'm not gonna handle it anymore, dude. Like, I'm really not. Like, this is a free country. This is not the United Kingdom. Okay. Now I'm just kidding. I'm just kidding. Just kidding. But all I'm saying is, like, hey, at the end of the day, I'm gonna say what I want to say. I'm gonna say what I want to say, and it is what it is. It's Sinai. Sinai, goodness. $30.58. $30.58 on Palantir, up 4%. $30.58 on Palantir. We keep you accountable. It's not dictatorship, it's social responsibility. No, it's dictatorship, dude. It's dictatorship. Amit's worried about his pronunciation of an Italian hospital when he can't even say Sinai. Oh my God. The point is, healthcare is going to be so quick to grow. Fucking logistics is going to be great. When you're powering Wendy's supply chain, I mean, are you kidding me? Like 6,000 stores depend on Palantir to power their supply chain operations. Come on, bro. And then the defense business is growing. It has started to reaccelerate. Like, this is a growth story, dude. Is it an expensive growth story? Yes. Given the growth is not a fully materialized yet, right? Only 27% year-over-year growth. I think the street wants closer to 32, 33% year-over-year growth. It's not fully materialized yet, but the market's paying for those future gains. Cool. So there you go. $30.58 on Palantir. Where is Tesla right now? We'll get back to Palantir in a second. Tesla is at 203. So Tesla's up Tesla's up 3%. SMCI is up 1.86%. Nvidia's up 3.8%. Where's Robinhood? S&P's at 538. Robinhood 1870. There you go. Robinhood getting a little bit of momentum right here. Apple at 220. And then Palantir again at 3054. Douglas says, also consider this. Healthcare is usually a defensive sector, so Palantir's exposure to defensive markets to what is not to love. That's a great point. So you might have been seeing some people talk about the rotation to defensive parts of the markets. And all that means is that you want to be in parts of the market, consumer staples, healthcare, et cetera, that aren't contingent upon growth and aren't contingent upon aren't contingent upon good times. So for example, if we have a massive recession, the reason McDonald's catches a bid is because most people will be able to at least afford to eat at McDonald's. Now, if what's a company that's like Cheesecake Factory, I wouldn't want to own Cheesecake Factory during a recession because Cheesecake Factory is more of a luxurious item. I take all my side chicks to Cheesecake, right? And then I spend about $100 every time I'm with them. So I kind of wouldn't want to be in having exposure to Cheesecake, ticker symbol cake, because you can't spend that much on your side chicks when you have a recession, right? You got to go to McDonald's or Wendy's and get a 4 for $4. So I think that is why another argument is that healthcare companies like United Healthcare, et cetera, will do well during defensive times of the market. And if Palantir is powering some of those defensive parts of the market, much less Palantir is powering defense around the world in case we were to end up in a war. There's a lot of ways you can go long Palantir, whether war breaks out, whether we get a recession. Palantir stock will still get hit, I think, if we have a recession, but I think their earnings growth might actually accelerate, even if the stock doesn't necessarily reflect that in the short term, which is going to be very good for Palantir. Cheesecake Factory is luxurious. It is, bro. It is luxurious. I mean, Cheesecake Factory is it's not like Peter Luger's or anything, but I think you could take a first date to Cheesecake Factory and not be seen as like a cheapskate or something. Cheesecake Factory is decent. I like Cheesecake Factory. So I think that's my point, is you don't want to own that during that time. Let me show you guys the Mount Sinai example. So this is a video of them talking about this. This is a 2-minute video. Let's watch this real quick. This is them explaining how valuable Palantir was for those that haven't seen it back in January.
Efforts, we really knew that we needed to underpin this with technology to really be able to serve as a foundation for all this work. And what I like to say is to dig up all of that little needle in a haystack information that we need in real time in order to be able to do process improvement in real time. And this is where our partnership with Palantir began. And so we went from data ingestion to go live with our first pilot in a little over 4 months. Our initial area of focus was really to be able to pull forward clinical criteria of emergency department patients who met guidelines to be able to be treated for their admission episode of care in our hospital at home or at another campus where there was a bed readily available to be able to go ahead and continue their ongoing treatment so that they weren't just sitting in an overcrowded emergency department. And just to give you a little bit of background, our teams used to go ahead and search this patient criteria in the mornings every single day, only to identify these patients at peak times when our operations in the ED were surging. And so now we're trying to take care of all those new patients, as well as move these patients to other levels of care. And you can imagine that's the perfect collide. And so what we were actually able to do was we said, okay, listen, if we can get a hold of these patients right away and reduce their time in the ED, we'll actually reduce their time on the back end of their length of stay.
Which saves money for the hospital. If they can get you out quicker and more effectively, then boom, they save money. And that's where software plays an advantage.
And that's absolutely what we found. So for all of these eligible patients that could continue their care and treatment elsewhere, we were able to shave 1.5 days off of their length of stay. And just to give you an idea of what that means for the hospital, we added 20 beds back on average every single month into the hospital without building any net new beds. And right now we're tracking an annualized ROI of $1.5 million. And just to give you a sense, that's one department, one small test of change in one hospital. So we're looking forward over the
I mean, dude, come on, bro. 20 extra beds, 1.5 days. They get you in and out of the hospital quicker. 1.5 million in one department they're saving in one hospital. And they've got a network of hospitals throughout New York. Like, that type of stuff is like sticky, bro. It's sticky, sticky, sticky. It's going to scale. For those that haven't seen that video, I'll put it in the chat. This was one of the underlooked partnerships that Palantir had back in January. I mean, dude, this shit's gonna fucking like, this shit's gonna hyperscale when it's time. Again, it's gonna take time for that to play out, but I do think healthcare is gonna be one of the better verticals for Palantir. So we'll see how that plays out. 3044 on Palantir, Robin at 1861, Cheesecake 3673. Now we got Cheesecake on the watch list because we're mentioning it. I would love to own Cheesecake Factory. I don't know, dude. Like, I don't know how, like, I love eating there. I don't know how cool it would be as an investment, especially because I haven't gone through their numbers that much, but I don't know how much they're actually growing. Like, they have a dividend of 3%, but I'm not buying them for the dividend. So I would want to see them grow. The restaurant I would actually want to own if it went public. Let me know in the chat what restaurant you would want to own that's private right now if it went public. But I think unequivocally, if Chick-fil-A went public, Starbucks up 21%, I would be a buyer on day one. There is something about Chick-fil-A that it's just like, people just, at least in the United States, people cannot stop going to Chick-fil-A. Like, talking about Chick-fil-A right now, I like want more Chick-fil-A. like, and I haven't had Chick-fil-A in a while, but like, Chick-fil-A is just one of those restaurants, dude. People get so excited for it. Eli Lilly at 912, up 3% right now. IWM small caps are up a little bit. Rocket Lab is down 5% on the day. I don't know why Rocket Lab's down 5%, but it is down 5%. They had a good earnings. They were up 12% on earnings. Now they're down 5% here. Palantir at $30.50. DoorDash up 1.44%. S&P 537. XLF Financials at 42, and then QQQ at 1.3% right now. Oh, Potbellies, that's another one. I was at Virginia, and I had them for the first time in a while. Dude, I had Potbellies in 2015. And I haven't had them since then. Like, literally, I had them at a debate tournament in Chicago in 2015. And then finally in Virginia, I was there for a wedding a month ago. I had them again at the airport. And it was just as good as 2015. So that's another one that I love. That's a good one. Dunkin' Donuts was public, then they went private. They were public, but then they went private. Chris says, Gina, ramen, Torchy's, tacos, Chick-fil-A. Yeah, Chick-fil-A would be a big one. In-N-Out, I think this one would end up being a meme stock just because its brand is so strong. So I think people would love In-N-Out. AMD back to 140. Okay, not bad. AMD, the dip was at 128. No, 115. It hit one. Oh, yeah. Well, that was on August 5th. It's like the August 5th dips don't even count unless you were literally staring at your screen and you had the chance to get, like, the August 5th dips aren't real unless you magically were near your screen when shit was hitting the fan and you were able to buy the dip. But the actual dip was around 127 on AMD. Now back to 140. Where's NVIDIA? NVIDIA is, wow, up 4.3%. NVIDIA was just up 5% yesterday. That's a $160 billion move in market cap. NVIDIA is moving momentum. NVIDIA is moving on to momentum. Panda Express, I think that one would be good too. I think Chick-fil-A, I think that would be the one. Oh, Sweetgreen. Yeah, Sweetgreen. This is another company. They had an amazing earnings. They absolutely crushed. I know in New York, this is a big Sweet Green. Like people, they were at $23 on August 8th. Now they're at 34. A lot of people who work in corporate America, I see them go to Sweet Greens to get like a salad, like a very specific type of salad. It's you can definitely call it an expensive, overpriced, kind of like a Whole Food salad, but it's one of those things where if you're in a certain demographic, you're willing to pay that premium. So Sweet Greens is another one that has done well. Kris says, send me a StreamYard. All right, we'll get Kris on the show. Kris, let me send you the StreamYard. We will get Chris's thoughts on whatever he's thinking about as I get him in. So let me go to the Starbucks CEO thing while we're waiting. Let's transition to that and try to get some more updates on what's going on with that. Palantir currently still at $30.44. Let's take a look at this, and then we'll get Kris on the show.
To bring you, and this is big. Starbucks' CEO, Lakshman Narasimhan, is now stepping down as CEO and director. That is effective immediately. The company has named Chipotle's CEO, Brian Niccol, as chairman and CEO. That's going to be effective September 9th. In the meantime, the company's CFO, Rachel Jerry, is going to be serving as interim CEO. This is big news in the world of both Starbucks and, of course, in the world of investments, because there have been a number of activist investors around this. Melody Hobson, the current Starbucks chair, will become lead independent director. And we're going to be able to break all this down, hopefully, in just a couple of minutes. She's going to join us on the show. But we've been talking about Starbucks for quite some time. Lakshman taking over the company about a year ago. The stock down since he took over. Just in the past year, you're looking at the stock down about 25%. By the way, the news here up now, putting the stock up about 8%. On the back of this news.
Chipotle is doing.
Chipotle is down.
We should
7%.
also take a look at Chipotle as well, and we're going to have to see who's going to ultimately run that company. But you can see the confidence that people have in Brian.
Keep in mind what has happened to Chipotle stock since Niccol took over.
Yeah, it's
in
incredible.
2018. March 2018, he took over. The stock was split adjusted roughly $5 compared to where it is now.
Wow.
So that is the kind of operator
That's amazing.
he has been. They've been able to fight inflation with price increases, innovation to the menu, also a lot of technology improvements, the Autocado, which automatically scoops out the avocado. So a lot of...
That's a thing? Autocado? Dude, this guy's going to take Starbucks to the moon, bro. He came up with Autocado. I didn't even know that was a thing.
Things like that. If he can impart some of that to
Right.
the Starbucks story, which has had so many different problems, for the first time offering a $5 pairing menu now, because they have to join the fight in terms of, consumers just pushing back on prices at this point. That's what Narasimhan has not been successful at. And so this is really seen as
It's amazing that they.
All right, so that's the little update on Starbucks and Chipotle. One thing I'll say as well before we get Kris on, I just noticed yesterday when I was listening to the Twitter Spaces, let me know in the chat if you guys knew this or not. Did you guys know Tesla's Model S, Model 3, Model X, and Model Y spells out sexy? Did you know that? I didn't know that. Elon admitted that. I'm sure he's admitted that before in the past, but I heard it for the first time when he was talking to Trump last night, and I was like, holy crap, that's why he named them the Model S, X, 3, and Y, because it spells sexy. Like, I had no idea that was the case. But that along with avocado is blowing my mind. Palantir at $30.72. All right, folks, let's bring one of our favorite contributors on the show. Apparently, all of you guys knew that. I didn't know that. It is what it is. Kris Patel. Kris, what's up?
What up? How's it going, man?
How you doing, man? Do we want to start off the conversation with restaurants, or do you want to talk a bit about some of the macro stuff?
Yeah, I think first let's talk about the restaurants, because I think one of the cool things about restaurants is that they kind of like tell you generally how the economy is doing. And so you can actually take some of the data that's coming from them and utilize that on the consumer strength part, right? So, when you're investing, you have to look at like canaries in the coal mine. So if you see like a canary where it's basically, you know what a canary in the coal mine is, where that reference comes from. Right?
It's like a hay in the needle stack, right?
No.
Sorry, needle in the haystack, right? It's like
so
that's what it means, right? Like
when you dug for coal, there were noxious gases that were deadly, that could end up killing you, right? So it was carbon monoxide. So the thing is, like, canaries are more sensitive. So when they went to go mine back in the day, they didn't have these advanced sensors. They took a canary, and so if a canary died, you knew that, hey, these gases were coming out, and that you need to get out of the mine quickly. Otherwise, you're gonna end up dying too.
But the metaphor means, but canary in a coal mine means the canary is bad or good in that metaphor?
The canary is just an indicator. It's like a leading indicator of something to come.
But it's a bad indicator or a good indicator?
It depends on how you look at it. It just depends on how you look at it, right? So one of the things I was looking at is Sweet Green. Damn, man, the Starbucks is just rocketing.
Dude, this is stupid, bro. Okay, real quick, before you let me get your take on Starbucks, then we'll get to Sweet Green and some of the other companies. Does this make sense? 22% on a new CEO?
Yeah, I think it makes sense.
How does that possibly make sense, dude?
So the old CEO had a lot of he wasn't exactly like, first of all, Starbucks is a huge international conglomerate that's just all over the place. And their sales started to grow down under his leadership with no signs of recovering. And it was bad. Like some of the stuff that they came out with that was more recent, like I was wondering, I was like, who the hell even wants to drink this shit? Like this refreshers, the spice refreshers. Yeah. Like who's fucking trying to drink a spicy refresher? So I don't know what it was. So I looked at the CEO very quickly this morning, just some of his ideas, and I think he's actually one of those people that gets it. Like he has a consumer mindset where he's like, look, I'm going to create products that cater to the consumer's needs, not me catering a product and then telling the consumer you need to adjust to this thing. So I think a lot of times CEOs who understand that about a service business where they can incorporate a lot of those things into the business, they do exceptionally well. And you can already see he's got a track record at Chipotle. If he was unknown and the stock went up by this much, that means that they just didn't like the old guy as much.
Yeah.
I mean, so I don't know what Starbucks gave up to get this guy. I know that a lot of it was just activist investors in the background, like Elliott Management was the one that really pushed for him to get the position. And if he could do the same thing for Starbucks that he was able to do for Chipotle, it's crazy what the possibilities are for Starbucks. So we'll see what happens. Hopefully this is not like a situation with PayPal a little bit with their CEO when he came in and everyone was like super optimistic and then he kind of like fell flat a little bit. Right. By the way, I still think the guy's a good guy. I think he's Kris. I forgot his name. Alex Kris. I think he's pretty good. And PayPal is recovering nicely, but I think it's more so because the fundamentals of the business are just very oversold.
So would you buy Starbucks here up 22% off of a new management change?
My wife holds it. My wife's got it.
Okay. So your wife,
my wife's got it. So yeah. So she drinks Starbucks all the time. So she's got some. So,
okay. So can we speak to this in the context of restaurants, defensive sectors? If things get bad, is that when you want to own restaurants that are defensive and like the Texas Roadhouses of the world, the Cheesecakes aren't the best name to own, but McDonald's is? And how would you think of that philosophically when investing during a defensive period of time?
I mean, there's consumer staples versus consumer discretionary. Fast food in general is discretionary. Like no one needs to eat at McDonald's. Right. No one needs to eat at Burger King. Everyone chooses to eat at Burger King, chooses to eat at McDonald's. So I personally don't know enough of which side the consumer is going to pick to make a judgment on that. I think of them as consumer discretionary more than I think of them as consumer staples. But there's a lot of people that are, that are focused on this as a consumer staple. So I don't know how to validly judge it, And so you'd have to be very, very nuanced in which restaurants and what you think it's a staple versus discretionary. So I agree with your assessment. It's just I don't know what the consumer is going to end up doing. So how their habits are going to be formed. So, yeah.
Okay. Macro PPI. I mean,
wait. Before we do that, let me tell you about my thesis on Sweet Green.
Oh, you have a thesis on Sweet Green. Okay. Tell me your thesis.
Sweet Green. Let me just share my screen real quick. Sweet Green has been doing exceptionally well this year. If you look at the chart, they're up almost 5x this year alone. Right. So
really, they're up 500%.
Yeah, look.
Holy crap, dude. It was $9 in January.
Yeah. Wow. So Sweet Green, if you ever look at their locations, right? Let me show you right here. They're pretty much concentrated in city centers, right?
Yes.
These guys really cater hard to the office crowds. One of the reasons why they took a huge dip is because after COVID, office workers are working from home and then they're working 3 days, 2 days a week. Now they've gotten back to the 5 days a week, which means that now the earnings are starting to look better too. So if you look at where sweet greens are usually positioned, they're usually positioned city center, where majority of the workers are. See, like this, that was DC. This is actually, what is this? This is DC, Gatlinburg. I don't know what this one. Yeah, this is DC. That one was Boston. This is Silicon Valley, like the valley right here.
Yeah.
This is Chicago. Downtown Chicago has the most sweet greens. So the concentration of sweet greens are, in my opinion, primarily centered around a lot of office work. So as sweet green recovers, it's kind of that canary in the coal mine thing to say, you know what? Office vacancies are probably going down. There's more people going to the offices now because more people are going to the lunches again. And that actually works because I was tracking a lot of like
it's the hay in the needle stack. It's the hay in the needle stack, man. You're getting you got your reference all messed up, bro. It's one of those indicators that's telling you that now you're going to start to see like improvements in cash flow in a lot of the REITs. So if you go to SL Green, type in SLG, you'll see that it's a huge move up and their vacancies have come down significantly. Look at that. Dude, being long SLG and Sweet Green would have done better than being long Google and Microsoft this year, which is crazy.
Yeah.
I mean, if this is not a stock picker's market, I don't know what is.
Same thing. And so there's still a bunch that are still recovering around that are really good plays that are just a lot of people don't really know about them. Like here's another one, BXP, Boston Property Group. This one hasn't recovered nearly as much as SL Green, but it's doing well. It's going to actually do well financials wise, you know. So one of the things is now is the time to really be in the nitty gritty of things and find these great companies that have been oversold that are going to do well on the back end. So right now you have companies like BXP, SL Green, Vornado. The reason why they're going to do well is they have two huge catalysts in front of them. The first catalyst, that's you want to put VNO up there.
Vornado Realty.
Yeah. And this one is primarily based in New York City. You know, so there's two main catalysts that are going to come. Number one, these companies all have a tremendous amount of debt on their balance sheet. So now with the Fed cutting, that means that interest rates are not going to impact their cash flows nearly as much because they'll be able to refinance at better rates. So that's number one. And some of them have a lot of floating rate debt, which means that it'll benefit them even more. So that's number one. And the other thing is with return to office now starting to become more normalized and vacancy starting to come down, you're going to see a rise in cash flows there. Jesus, man, look at that fucking green candle, that God candle.
Starbucks is up 1% year to date just because of today.
Yeah,
I mean, goodness. So would you? Okay, so last question on this: would you go long Sweet Green right now, or are you kind of just using it as a hay in the needle stack to try to figure out where the future is going?
The stupidity on my part is that I only use them as a canary in the coal mine, where technically the investment was these guys. We just missed the 5x because we're using the fucker to track. Like, that's what happens. Sometimes you get so caught up into the investing thing that like you're using one thing as a benchmark. So you're like, yeah, look, I doubled my money because I used this as a way to figure out that this was happening. But then you're like, wait a second, I should have just bought these guys. They're all their revenue and everything is going up. They're returning to cash flow. So I'm doing analysis on Sweet Green as a business right now, just to see what the kind of market potential they really have outside of the general areas that they're already in, and like what kind of demand we could see in the future. So we'll see.
All right, macro PPI beat on all levels. What's your take on this PPI, and what do you think it means for CPI?
Oh, CPI is going to be lower, bro. I agree with you this morning when you said all these guys are sandbagging their own CPI predictions. I totally agree with you. I think all of them are doing it. It's like a coordinated effort by Wall Street to say, you know what? We're going to keep expectations high so that they can be beat easily. And then expectations low so they could be beat easily. And so this way the market will kind of come back a little bit. So what's the fear index right now? How's that doing? That should be retreating like crazy.
Fear and greed. Last night it was at 26. Currently it's at 24. Wow, we went to extreme fear again today.
Go to a timeline. No, it wasn't at 26 yesterday. It was at 24. I don't think it moved much. So you're seeing it steadily rising, right? So if we get good core CPI tomorrow, it's definitely going to get repriced higher. Right now is, I think, in my opinion, this is something I spoke about on Cash Flow Chronicles. Like, me and Matt are heavy in TQQQ right now because a lot of people had this growth scare. And so because of that growth scare, a lot of people sold off really good companies in the Qs. And right now, as they recover, the Qs are probably going to do really well. So
what is the logic for buying a triple leveraged ETF specifically on tech like the Qs versus just like the NASDAQ itself?
So go broaden out a little bit, go to like year to date. Okay. So the thing is, whenever you have certain momentum moves in the market where things get oversold, you can actually kind of take a step back and say, you know what, I think the market's oversold. So the chances of things going higher are much lower. Are much higher than much lower. So this is like a play in directionality. So right now, the direction that I see tech, because it's been oversold, if you look at the RSIs on Amazon, on Google, on all of these guys, they're oversold. So the thing is, even a small raise, like, or retracement on their part, we'll see an outsized move in triple leverage Qs going higher. So this is not something that I would recommend anyone hold as an investment, but it's like there are times where you can use this to hedge positive, so that this way you can outperform the market, right? So right now, if you think that the market is oversold, yeah, you should be willing to take a little bit of risk and say, you know what, I think the market's oversold. I'm gonna use this instrument to ride higher, and then eventually, when the market gets to a point where I think it's more fair value, get out of it and go back into the traditional companies themselves.
And that's where the leverage funds help accelerate the gains on the moves to the upside.
Exactly. So they exaggerate the gains to the upside and they exaggerate the gains to the downside. So that's why if you look at Meet Kevin, his take was, oh, you know what, I'm going to be super bearish. So he brought a lot of SQQQ. I was in the opposite camp this time and just said, you know what, I think the market's the yen carry trade is pretty much all done with. If you look at the JPY versus US dollar, you can kind of see that it's stabilized. So now we're kind of trading based on fundamentals again. And the thing is, the economy is doing okay. I'm sure it's slowing down a little bit, but it's not to the degree that deserves a $30-$40 sell-off on Amazon, especially when the business is generating a shit ton in cash flow.
Right.
So, yeah.
So, okay, let's talk about this Japanese yen carry trade, because you helped me understand this. You helped a lot of the audience understand this as well. Goldman Sachs today says that net shorts went from 15 billion to 1 billion on the yen. Do you really? But then you got Dan Niles saying we haven't seen the extent of this in September. We're actually going to see the bottom of the market. Who do you agree with? Do you think Dan Niles is right that we need another retest of the 10% correction on the S&P to 507, or do you agree if people aren't shorting the yen anymore, the worst is done and it's time to just slowly move back up?
I mean, it depends on your time horizon, right? I think everyone is, to me, whenever I hear anyone on CNBC, everyone is always right and everyone's always wrong. It just depends on the time frame that you look at it. I think Dan Niles might actually be somewhat correct. But I think we're likely to see a move higher in the next few weeks. I think we could have a Black Swan event come hit us in September that could bring the markets down. But I mean, he has the right.
What? Any ideas on what that event is? Just like,
the thing is, whenever the markets move heavily in a certain direction based on like policy moves, to me, it feels like that policy move has an opposite reaction when it's taken off. So if you look at like BOJ, right? BOJ came out, they raised a quarter basis point, and then they came out as, inflation hawks, and the market crashed, and all of a sudden now they came out. So the thing is, there's going to be a time where the wall of worry has to be penetrated before you're really going to see any movement higher. Because right now there's a lot of people sitting on the sidelines. That's why if you look at the fear and greed index, everyone's fearful. And there's a lot of people that are just sitting on the sidelines saying, you know what, I think the market can go lower. I don't think that's necessarily the case. So I would say Dan Niles, smart guy. I think he's got it wrong. It could be something more like October, November, where we see more of a downturn, especially if the if the earnings next quarter come up really bad again too. Right now, half the companies are saying consumers okay. The other half are saying the consumer is weak.
Yeah,
so
Home
there's
Depot.
kind of like a
They said,
disconnect.
well, I mean, how do you reconcile that, right? Do you think Home Depot is price gouging too, like Disney, or do you think there's a real concern there?
No, I think the market dynamics are flipping a little bit with regards to some of the retailers and stuff that's out there. So I think right now you have to be very nuanced and figure out, okay, why is this happening? So right now we both you and I know housing is slowing down, right? People are not buying a lot of houses. People are not selling a lot of houses. When people go to Home Depot, it's usually for home improvement because either they're buying, they're selling, or they're just doing general maintenance. So if the transaction volumes on homes is going down, that means that people are not going to Home Depot as much.
Right.
Right.
Yep.
So it doesn't take a genius to figure out that, hey, maybe Home Depot isn't the best example for the rest of the market as the consumer is weak. Like that's what's happening right now with the market, where a lot of people are just generalizing, like, oh, if Home Depot's down, that means the consumer stops spending. No, maybe the consumer just doesn't want to spend on housing related shit right now.
Now, that's a good point, dude. Like your argument essentially is like, if we're not buying homes, most people go to Home Depot to buy little nicks and knacks for their home, refurnish, all that stuff. If that's not happening, you're obviously going to see a little bit of a slowdown. And quite frankly, Home Depot put up some pretty good numbers, even if the housing market has taken a crap. I mean, they missed by like 100 million, which is not bad. And then same thing with Louis Vuitton, right? They had bad earnings, but people aren't going to be buying LVMH products when there's a little bit of a slowdown. But that's not the general consumer, is your point.
Yeah, I think we have to take the consumer and put it into kind of like a two buckets a little bit. Let me show you the reason why we have to do that, especially right now. But did you watch the All In pod this week?
I did not get a chance.
They actually had a good discussion about this. Let me just show you really quickly. So one of the things about me is that I'm very charts heavy guy.
This is Kris's Patreon, by the way. His Patreon is on Twitter. If you guys want to subscribe to that, I'll put his Twitter in the chat and you can check him out.
So one of the things, do you know the difference between nominal and real?
Is it the difference between needle and a hay? I mean, I don't know.
So nominal just means the number, right? So basically, like, let's say you have $100,000, right? Like, let's say you generate $100,000 in revenue and you generated that in 2019. And then in 2024, you generated 150,000. So your nominal increase is $50,000. But your real increase may not be as much, especially in terms of pricing power. So what ends up happening is
because of inflation, right?
Right. So when you adjust the numbers, you have to look at like products based on nominal and also based on real. So if you look at this chart right here, you can see that on a GDP per capita basis, right? GDP on a per capita basis has been growing significantly on a nominal basis. But then if you look at it on a real basis, it's actually not that bad, like not that big of a raise, right? The reason why this giant discrepancy is important is because this actually highlights the two different consumers that are out there and how each one is impacted differently by interest rates. So as an example, let's say you have your own house. Like your parents right now, they bought their house, they have a 3% mortgage on their house. You know, whether inflation is 5% or 6% on shelter, does it really impact them?
Right.
Probably not. You know, maybe they pay a little bit more insurance, a little bit more property taxes, but it's not like crazy amounts higher. Whereas someone who is more impacted by inflation, their landlord comes to them and say, hey, I want a 7% increase in rent, right? Or a 10% increase. They're more impacted. So the thing is right now, people at the bottom level are struggling because their wages are basically deteriorating, right? And the people at the top, which own assets, which own things that are valued based on a nominal basis, they're actually doing quite well. So even if you look at it on a disposable income basis, you can see here from 2019 to now, on a real disposable income basis, on a per capita basis, it's actually kind of flatlined a little bit, right? But if you look at it based on nominal is actually more, people have more money to spend now than before. It just depends on what type of consumer you are and how you're impacted by the interest rate regime that we currently have. See, so you can see this widening right after the interest rates started to rise, where some people had a lot more disposable income, where other people kind of just flatlined.
Yeah, this is really interesting. So this chart, the green line is showing disposable personal income per capita. Then the red one is real disposable personal income. And your argument is more people with assets in nominal respects have more actual dollars versus just like the rate of growth of personal income in the country in general.
Right. Because the thing is, like, your costs are not going to be going up nearly as much as someone who's at the bottom level, especially things like shelter. I think shelter is probably the biggest one, because the thing is, shelter takes so much of your income that it ends up like casting how your spending decisions are going to be made. So if you used to pay $1,200 or $1,300 for rent, and now your rent is $1,800 or $2,000, that's a huge problem for you. Someone who their house and their mortgage is $1,500, next year it's still going to be $1,500. Maybe property taxes went up by a little bit, in which case now you're paying like what, $1,520, you know?
Right.
So it doesn't impact them as much. But what's good is, because of inflation, they've been able to demand higher wages. So now someone who owns their house, if they had it at 3%, they got a 3% raise for the last 3 years in a row. Their disposable income grew by almost 10%, right? But their expenses did not grow by a full 10%. It probably grew by maybe 5%. So they have 5% more disposable income.
Right.
You know, so that's where we're seeing the bifurcation. And you can actually see that in a generational gap as well, because if you look at people who own assets, they're typically like the wealthier, older generation who have houses that are already paid off, which means shelter inflation doesn't impact them.
Yep.
Like if you have a paid off house, it doesn't impact you.
Yep.
You know, whereas someone who's coming up, it is. So right now you have this entire generation of millennials and below that are kind of coming into the labor market and labor force, but they're struggling. So if you go to like TikTok and the stuff, and you can see all like, oh, I'm struggling, blah, blah, blah. Majority of them are the younger people who right now, any wage increase that they have is getting eaten up by inflation. Whereas people at the top who've been there for a while, they're actually doing well. Like I'm getting paid more right now, but my mortgage is still the same, which means I have more money to spend on things. So this is where I would say you have to look at all these businesses in the light that, okay, where is the consumer spending their money? So my thing is right now, buy boomers, buy stocks and buy companies that cater to boomers, and they will do well.
And the reason for that is because boomers are giving that money to their children. Is that your argument?
No. It's because the boomers are spending money. Boomers are spending money.
Gotcha. Yeah.
So if you have a business that caters primarily to like the needs and catering of boomers, you're going to do well. Like healthcare is going to do well. Why? Because all these boomers are retiring. Where do you think they're gonna? What do you think they're going to need? They're going to need fucking pills. You know, they're going to need hospital visits, right?
Yeah, that's fair. I mean, United Healthcare is up nicely this year as well. Yeah, that's a good point. Okay, this argument by Austin, which I've heard people say that the carry trade is not over. Bank of Japan only walked back their rate hike because it was imploding and because maybe Janet Yellen called them. Is that enough for them to wake up, you know, next year and then decide to raise rates? Like eventually they're going to raise it again, right?
I think Japan really like screwed themselves over royally with this. Now all these other people are going to more than likely put the trade back on because they're like, yo, the BOJ is a bunch of bitches. That's what I thought. It's like they couldn't even live with their decision for more than 48 hours. Bunch of bitches. You know?
I mean, dude, that's kind of fair. So yeah, so it's going to make the carry trade. I think it'll implode eventually, but at least not in the next 6 months, which is what we need to get through 2024.
You want to know something? I was reading something very interesting on Twitter. Someone brought it up where the Japanese government, they have like a pension fund, right? So the pension fund has actually been buying U.S. equity and U.S. assets using their own currency, turning it into dollars, and then going out and buying U.S. equities and shit. So it's like, y'all a bunch of bitches, bro.
Dude, if Japan is engaging in their own Japanese carry yen trade, then I mean, come on, dude, they can't raise.
They are. That's the thing. If you look at the okay, let's take a look at the pension fund, Japanese pension fund.
Real quick,
huge.
While you're bringing that up, one stat, let me show you guys. This data just came out. A small business optimism index is at the highest level it's been since February 2022. So I know we've seen more bankruptcies, but we are seeing small businesses, when surveyed, say, hey, we are pretty optimistic about the state of the economy. So that's one sign that the economy is at least not doing as bad as some people think it is. And small businesses are actually 66% of businesses in the United States. So most people in small business.
Here we go. So take a look at this. So this is Japan has a $1.5 trillion pension fund, right? And the thing is, it's been growing, right? So technically speaking, how does this happen where the pension fund grows? Well, the reason why is because they actually go outside of the country to invest. So right now, this is what it is. So foreign bonds, Japanese stocks, and foreign stocks. So if you look, they have almost 62 trillion yen.
Yeah.
Which, if you translate it down, that's about half, like a 500 billion in just foreign stocks.
Yeah.
So and then you have also their own stock market, which, by the way, took a dip. So the problem is, if you look at this on a political from a political standpoint, they kind of can't mess up their own stock market without screwing over their own pension fund. Does that make sense?
I'm gonna have to tweet this, dude. This is some really good stuff. But how do you know they're short the yen? Like, is it
because they borrowed in yen?
No, but how do you know that? Does it say that they own Japanese bonds? Is that why?
No. So you'd have to do more research. Okay, like I said, I saw a lot of this stuff here. A lot of this stuff is very opaque in the markets, right? So definitely do your own research on that. It's just the data that I was seeing is showing that the Japanese pension fund is actually in the Japanese yen trade itself.
No, I think you're right, dude. I think you're right. I think that's the whole point of this article as well. That's why the Wall Street Journal put this out. If that's the case, dude, that's insane that they borrow their own yen to buy Nvidia.
I mean, it's not stupid, bro. I think it's smart. Like, imagine right now the U.S. government, instead of investing in U.S. treasuries for the last 30, 40 years, took that same money, like Social Security, right? Social Security is our trust fund. Instead of taking that and putting it into treasuries, which were yielding freaking like barely anything, take that same money, put it into the stock market, bro, it would have been awesome. Imagine. So we wouldn't even have the discussion right now that we're gonna be running out of money in Social Security, right?
Yeah.
Instead, we would be like, hey, how do we lower the retirement age to 55? That's how good we probably would have had it,
Yeah, and no, you are right about this. That's the whole point of this article. I mean, you got a quote right here. The yen depreciated against the dollar and euro in the previous fiscal year, which had positive effects on her investments performance. I mean, dude, they absolutely want. I mean, look at this. The fund manager is saying, yeah, because the yen depreciated against the dollar, that helped our investment performance. And then you got the Bank of Japan saying, oh, let's raise rates because consumers need to feel more confidence. I mean, dude, fuck that. That's not helping anything. That is not helping anything. That's a good point, dude. That's a really interesting insight. So Japan themselves messes up their entire $500 billion foreign investment fund if the yen appreciates against the dollar. And in June 8th, it was doing very well as the yen was depreciating. And then when it starts appreciating, you get turmoil. So it seems likely they're not going to raise rates.
Someone saying Social Security funds are not invested, just a line item in the budget. I thought they bought treasuries with it. They bought long and short-term treasuries. I mean, hold on. Let me see 1 second.
I want to deep dive into Social Security one day. I still don't fully understand it. Like, I get the basic premise of what it's used for, but you've got every politician saying it's going to run out by like 2040. And some people saying that it's not needed. Some people saying they want to cut it. Like, there's a lot of politics around that part of the budget as well. What's Chris's handle? He sounds like he knows what he's talking about. let me put it in the chat.
Not really. I talk out of my ass a lot. I just sound smart doing it. I've been wrong on plenty of things.
Yeah, the thing I like about Kris is he finds really unique insights. Like, I did not know Japan. I mean, I should have known that. That's obvious. Of course, Japan is buying up Nvidia and Amazon. Like, why wouldn't they? Especially if they can borrow against their own currency. So
Dude, the Norwegians have been doing this shit for fucking decades, man. And that's why, like right now, Norway, how much money they have per person in pension fund. They're like literally a country of 5 million people, yet their pension fund is like, I think 1 point something trillion.
Trillion, yeah.
Right.
Yeah.
So anytime they've gotten profits from their oil and natural gas, they basically took it, reinvested it back into the S&P 500 and basically just did extremely well. Right. And what's funny is the Norwegians, even though they have an abundance of oil and natural gas, what did they do with that? They basically sell it. Instead, they all buy electric cars, right? So Norway has one of the highest rates of electric car adoption. So the Middle East does that as well.
It's 295,000 per Norwegian citizen.
Crazy, right?
The United States is not, dude. We are. If you guys looked at the debt, I think all of us are in debt for about 260,000. Like every U.S. citizen has technically $267,000 of debt if you divide it by the overall debt. Norway has a surplus of not 295,000.
Yeah.
Incredible stuff. Okay, so overall, you think CPI is going to come in good tomorrow? PPI is good. Nvidia, why do you think it's running up right now? Is it just people getting excited for earnings, or?
Yeah, I think it's earnings. I think a lot of earnings, maybe there might be some earnings chatter there as well. And the thing is, Nvidia did get a little bit oversold. So some people might just be like, oh, I want to be in the catch up for Nvidia. Especially now that a lot of the earnings for the mega caps, they're not slowing down on CapEx. At least that they didn't project out that they're going to be slowing down on CapEx. So people are probably trying to front run earnings. So we'll see what happens.
Is the Norwegian cruise line owned by Norway at all?
No.
Why is it called Norwegian?
It's just a name, man. It's just,
I don't know. It seems like Norway.
Here's one. Like, do you know Saudi Aramco? What Aramco means?
No, I don't know what it means.
Aramco used to be American Petroleum or something like that. Hold on.
I do know that they were the first $1 trillion IPO, for those that don't know that.
Yeah.
The first $1 trillion IPO, Saudi Aramco, which is crazy.
Yeah, I got to change the battery on my keyboard for some reason. It just ran out. So, no, the thing is, like, there's a lot of companies that have their history with another country, but they kept the name. But they, like British American Tobacco, right? There's no British Americans, right? Well, I take it back. That's a stupid example. I'm trying to think of a country, like a country's name that's in there. Saudi Aramco.
Is there an American company that's public that's named with American Airlines, but that's not a huge company?
Yeah.
Yeah, it is. American Airlines owned by the U.S. government. I'm just saying, bro. Like, it was. Yeah. I've been saying a lot of
Arabian. Tawid put it right there. Arabian American company, Aramco. That's right. There you go.
Is Taiwan Semiconductor owned by Taiwan?
it's Taiwan Semiconductor. Yeah, the Dutch East India Company, is that owned by the Dutch?
Oh my gosh. Okay, so Chick-fil-A, would you buy that if they went public?
Hell yeah, dude. Jesus Chicken is the bomb, bro. If you ever fly into Atlanta, like the airport, you will see there is one Chick-fil-A that's in Terminal C. That thing is packed. Like in the morning time, it is packed. If you go at night, it's packed all the time. It's there. Same thing with like anywhere you go in Georgia, you'll see this thing packed. Just Jesus Chicken is awesome, dude. I don't know what their margins look like, but Jesus Chicken is the bomb.
I mean, dude, even in New Jersey, it is packed like crazy. So I agree with you. Chick-fil-A is one of those that I would buy.
The reason why I call it Jesus Chicken is because they are a religious, well, I wouldn't call them like super religious, but they have a lot of like religious beliefs. Like they're not open on Sunday. Yeah. They could make so much money if they were open on Sunday, but they've chosen like, no, that's like the day of rest, so we're not going to do it.
Yeah.
So I call them Jesus Chicken. So.
All right, so you're still bullish on the market. PPI was good. Maybe we'll get your take tomorrow. I'll call you for 5 minutes on your take on CPI after we see that number. But what's your number? What would you put on CPI?
2.9,
2.9,
or maybe 2.8 if we're really lucky. But the point is, the market can interpret this in two ways. they can be very bullish about it and optimistic in a very, very short term, like within like a week. But then also it kind of confirms that we might be heading into a recession if it weakens at a very, very fast pace. Remember, whenever inflation is slowing down right now, it kind of also means that you're seeing less economic productivity and less economic growth, right? So a lot of people are like, "Oh my God, yay, deflation, woo!" And inside, I'm like, don't wish too much on inflation deflation, because if we have too much deflation, that actually causes a recession. You know,
Right.
if you think that the price of something is going to be lower next week or 2 years from, no, not 2 years, but like let's say next month, that means that you're going to cut back on spending because the anticipation is that the price is going to be cheaper. And so you don't want to get into this deflationary cycle, kind of like Japan did, where they had like almost like a lost decade. So deflation is definitely not the thing that we want.
Right.
We want disinflation. We don't want deflation.
Real quick, this question, super chat here. Kris, are you still bullish on Celsius?
Yes and no. Yes, I think the company is still performing. Valuation wise, I got out at 96. I haven't looked at getting back in until
Kris called the top, the tippity top.
Nice. That was
the
good.
Tippity top of that one.
Yeah. So it was a good trade at the time. The problem is the expectations ran further than what the market could support. Like the goal was for them to get to $100 by 2026. They got there in 3 months, which meant the valuation made absolutely no sense. And then at the same time, you started to see the slowdown in their growth, which meant that they literally needed a valuation reset. And I still think there's a little bit more room for it to go down, but not by much. So, if people are bullish on the company long term and the product long term, you could buy a little bit here and there. But I'm of the mind right now that I'm going to stay away from caffeinated products. I think there's too much competition. Like it just doesn't make sense to be in an industry where there's literally like pricing wars happening everywhere. So Starbucks is getting into the energy game. You have Dutch Bros in the energy game. Then you've got like Alani Nu. You got Celsius. You got
that
Red
Alani
Bull,
thing is taking off
Monster.
too. I see a lot of women on TikTok drinking that one.
Yeah. So the thing is, all these new products, every time they come in, it just takes away from any like singular moat developing around a business. And eventually there might be consolidation in this space, in which case then it makes sense to buy in. Because typically what happens is you have that nice curve, right? Where there's a good idea and the first mover gets all of this giant ride up, like Celsius did with the healthy energy drinks. And then what ends up happening is the competition comes in and kind of like the margins are all competed away, as Peter Thiel likes to say, right? In 0 to 1. But once all the margins are competed away and whoever ends up surviving, they end up actually being able to thrive because they have such large market shares that it creates its own moat, basically.
That was the story with Google, right?
Yeah. So,
all right. Thank you, Kris, for your thoughts. I'll probably call you tomorrow just to get your quick thoughts on CPI over the phone. But yeah, now if we get a good CPI, hopefully this rate cut comes in and things.
Someone's like, Kris is not short Palantir anymore. He got out a while ago. Yeah, I got out. That was a smart move on my part, man. I saw the writing on the wall. AIP cons were just way too successful. Like that steak dinner tour that Eliano's on. I mean, that's just bringing so many people, like just bringing so much awareness to the company. I think it's an excellent strategy to like put yourself out there, because a lot of people really came at this company like, oh, they're a black box company, we don't know what they do, blah blah blah. And so AIPCon was something that, and this is the part that I told you last time, it pisses me off because we spoke about it, that this was a good idea, that they should run with it, and they ran with it, and I didn't fucking pivot. I should have just said these guys are going to do well because they're going and doing a tried and true method. You know who I blame though for all of this?
Who?
Fucking Coach Trap. Coach Trap made me lose my bet to Adam. He went in there and told him all the freaking secrets to selling software and doing a good job. I hope they eventually make him some kind of like VP, man.
Well, here's the thing, Kris.
Mm-hmm.
Why not just buy back in?
No, fuck that. The valuation. I can't do it. I
But,
don't
but
have
hold on, but Chris, to be fair, at 16, you thought the valuation was crazy. At 23, you thought the valuation was crazy. At 29, you thought that, like, at this point, what's the harm in just buying 1,000 shares, DCA every year, buy 1,000 shares a year? For you,
I have
that's
more
nothing.
opportunities somewhere else. I have
No, I'm sure you have opportunities,
Yeah.
but to not miss it. I mean, if the stock goes to 300 and your average is 30, does it really fucking matter?
I have my one share that I bought in sympathy with you. You know, I had to support you guys because you were like a 29.99 and it was just staying there. So I was like, you know what?
We needed your share.
I'll get that one share in. And
but my thing is, like, do you think the stock could be 300 one day?
No. No, I mean, one day, yes.
So then why not buy 1,000 shares and just leave it there at 30? Like, what, Chris, the worst is it goes to 25, you lose a couple $100, a couple $1,000, and then you just sit on it for another 5 years. Like,
my prediction with this one is that it's probably going to waffle between 20, like the 20s and maybe 40s for the next 5 years.
Really?
Yeah.
So you don't see the upside over the next 5 years?
No, I see the upside. It's just, it's got to be a really long wait before the upside like comes in heavy. I mean, what is their earnings right now? How much earnings per quarter? You know,
5 cents a share.
5 cents a share a quarter. That's 20 cents a year. I mean, even if they grew that at 100% per year, I mean, it's just valuation.
What if they do, bro? Like, we talked about healthcare. You're in healthcare. You know, you saw the lady say she's saving $1 million in one part of one segment. I know you don't like the valuation. I don't love the valuation either, but this is the stock market. Things are going to get expensive when people really get excited about it.
Nah, man, y'all could keep it. I'm also not very bullish on AI in the short term. I think that AI is going to get reset hard in the next year or two. And the thing is, like, to me, Palantir is a AI proxy play. So the thing is, they might end up getting hit in that correction along with anyone that's really like AI focused. So
yeah.
Enjoy your wins. Like, all you guys enjoy your wins. I have other places where I think I have a little bit more confidence in, and so I'll stick to that.
All right, there we go. Kris, thank you for joining. Chris's Twitter, guys, make sure to check him out on Twitter, and he has a Patreon as well. Put that in the chat, and Kris will talk to you tomorrow.
Later.
Bye. Later. All right, so that's what we got from Kris. Some good macro insights. Palantir at $30.61. Do we cross 31 today? I don't know. Let me look at resistance levels and see what we've got going on. I think Robinhood's doing okay. Robinhood 1880. All right, not bad. Robinhood trying to crack to 19 Dolores. And hopefully after that get to 20. So at 30.70, we have 18,000 shares waiting for Palantir to be sold. And at 31, dude, there's only 20 fucking thousand. There's only 22,000 shares at 31. Like, if we get the volume, we can get through. If we get the volume, we can get through, especially during power hour around 3 p.m. if we hold up at this price. It's actually holding it nicely though, guys. Like, it's up 4%, and like yesterday was up like 8%, but that went away within like literally 4 minutes. And if we look at the chart from yesterday, look at what happened yesterday. So yesterday we got to 31.20 at 9:30, at 9:40, and then by 10:10, so 30 minutes later, you're down at 29.72, and then by the rest of the day, you're down at 29.15. Today we got to 30 by 9:45, 15 minutes after the market opened, and now it's 10:48, almost an hour, basically an hour later. We're up to 30.64, topped out at 30.75 so far. So I think we hold 30 for the rest of the day for sure, in my opinion, right? As long as we don't have like a sort of reversal on the broader market. I don't think there's any news coming out that could stop it. And then if we get good old CPI tomorrow, I mean, things can get fun. Starbucks right here at $93.50. They're up 21% on the day. So Starbucks getting a lot of love. I didn't realize that a CEO change was this important for Starbucks, but that matters. Nvidia up 5%. Nvidia getting a ton of momentum. And then AMD up 2%. So Nvidia's up, Palantir's up, and Starbucks is up. That's leading the day. S&P's up almost 1%. That's definitely helping all those stocks. And then the QQQ is also up 1.63%. And then Robinhood also doing its thing. Let's see if we can get Robinhood to 19, but Robinhood right here at 1882 on the day, up 1.5%. Again, Robinhood got upgraded to $32 yesterday. Big upgrade for Robinhood. I will be doing a watch party today at 8 p.m. So I'll be streaming Robinhood. Vlad was on a crypto podcast. So if you care at all about crypto, you can join. If you care about Robinhood, you can join, but that'll be an hour-long stream. We'll just watch Vlad give his thoughts on crypto and where he thinks the future of crypto is with Robinhood. All right, there we go. S&P at 538 on the day. I think that is it for me, guys. I'll be back on the market close. We'll see what ends up happening, but seems like we have some decent momentum in the broader markets, and now we'll just see where it keeps going. In terms of that last question to Kris on buying and holding Palantir, I kind of think of it like that. Like if you think Palantir is $300 one day or $250, I think buying at 30 is not crazy. Is the valuation a little tough at 30? Yes, of course it is. But again, now that they're reaccelerating, the market doesn't give a shit about the valuation. They care about will growth reaccelerate. The worst thing that could happen to Palantir is they deaccelerate growth in the next 2 quarters, because then all the momentum's gone. And I think they know that if they can just keep the trend going up, then the market's going to keep rewarding them. So I think if you believe in management to reaccelerate growth based on all the stuff we've learned, then I think you believe that the market will continue to give them a premium. Okay, word of the day. Word of the day. Today we had some very interesting things. I said hay in a needle stack. Or no, I said needle in a haystack. I said Mount Sinai. I found out that, when I figured out that Tesla was sexy, S, 3, X, and Y, it blew my mind last night. Like, I did not know that. I always wondered, why did he pick Model S? Why did he pick Model Y? Why did he, I had no idea why it was called a Model 3. Like, I had no clue. That was really exciting yesterday. I found out it was actually sexy. Word of the day is pandemonium.
Pandemonium.
Wild uproar or unrestrained disorder, tumult, or chaos. I guess some of the phrases I talked about this morning was definitely a pandemonium of my mind trying to figure out different things. Dude, when Elon said it spells sexy and he started laughing last night, I was like, holy crap. I did not know that. I knew the short shorts was like, when they had that on the website, that was his way of like teasing the shorts, but I never knew that S, 3, X, and Y was part of his master plan to essentially make a meme out of it. So there you go. Word of the day is pandemonium. It was a pandemonium after Palantir earnings. Yup, and at $30, it's still a pandemonium, dude. I mean, dude, it's holding 30 nicely. $30.54. Let's just hold 30 for the rest of the day. I don't even want to, I don't need to see 31. If we can hold 30, if we can close above 30.50, then you're in the high 30, or you're in the mid 30s. If close at 30.60, 30.70, we're in the high 30s. Like, that would be an incredible close after earnings. And I think it would be really, really exciting for Palantir. So let's see if we can get that close today. Starbucks still up 21%. Robinhood 1875 up 1.1%. And then the S&P 538 up about 1% on the day. There's no way you didn't know. I didn't know, bro. I did not know. I wish I knew. I didn't know. I find out new things every day with you all, and you guys see me find them out in real time. All right, that's it for me. I'll be back 3:45. We have a couple of earnings after the bell, nothing too crazy, but 3:45 we'll be back, and we'll keep going with the market close. Thank you, everybody. Have a good one. I'll see you in a few hours. Bye, everyone.